Good evening, friends. Welcome to the next virtual coaching classes organized by Board of Studies, ICAI. Today we are going to discuss on paper 8, Indirect Tax Laws. Myself, CA Gela Praveen Kumar. So I'll be taking two chapters. Chapter number 6, which covers on time of supply. Chapter number 7, which deals with your value of supply. So these two topics, time of supply and value of supply, today and tomorrow we are going to have a detailed discussion. So the rules for the modus operandi of today's discussion and tomorrow's discussion. The Institute Board of Studies have already shared the presentation material and also the working notes on the website. I request all of you to download the material and also the working notes. Reason? Couple of examples we have set from these two chapters, so you can have an understanding as we discuss through. Probably we will touch upon couple of problems for brevity of understanding. Second, wherever you have a doubt, you have the window in front of you. You can post your queries on the particular window. To the extent possible, we'll have this session as interactive as possible. For the simple reason, the moment we say taxation, especially indirect taxation, people feel a lot of fear. People have a lot of fear. Indirect taxation is something which is not that easy to deal with. I'll try my level best to bring the best of the taxation, how best we can understand and how we can make use of this particular chapters for our practice post qualification. So all set to go. We will start with our today's topic, which is dealing with your time of supply. So today in this particular chapter, time of supply, we will have look of couple of examples, definitions, which are relevant for us to understand this particular concept. From there, we will move on to understand few examples. What is the relevance of this particular chapter? What is the relevance of this particular topic called time of supply? How prominent is this particular topic for any layman or any professional to understand the value of this particular area? Then from there we move on to the section 12, which deals with your time of supply for goods. Section 13, which deals with your time of supply for services. Then there is section 14, which deals with your change in rate of tax in relation to supply of goods and services. Little important. Under GST, this particular chapter 6, section 14, which deals with your change in rate of tax. Why is it important? When we go to the respective slides, there are a couple of situations and scenarios covered, especially wherever there is a GST Council meeting, there is an impact of this particular section 14. So we'll have a detailed understanding of this particular section. Then we have common errors as a professional once we get qualified, as a practitioner once we get into the practice, or if we have to get into the industry. What are the common errors which we come across in terms of application of this particular topic called time of supply? From there we move on to the last slide called issues in time of supply. What are the practical issues? What are the practical issues we have to deal with once we get into the practical world, corporate world? Finally, end of this session, we will have a gamut of understanding what all learnings we had from this particular chapter, that is your time of supply. The practical scenario of this particular time of supply, what could be the issues once we get into the corporate world. We will have a detailed understanding at the end of today's discussion. To move on to the next slide, this is something which I have picked up this particular para, which was quoted by the Honorable Justice in the case of Steel Authority of India Limited versus CCE Raipur. This is a Supreme Court judgment, very worth reading. This is one judgment, Steel Authority of India versus CCE Raipur, which is relevant for us. One for time of supply, second is in relation to your chapter on valuation. So that is your chapter 7, where we deal with your value of supply. For brevity, I'll just read this language so that we will get the familiarity. Why is this? I'll also bring the backdrop of this particular case law. Let us read the language. What is that the learned Supreme Court judges have written? If the object of the law is to state clearly and unambiguously the obligations of the person, they have used the language clearly and unambiguously, the obligations of the person whom the law addresses, and to spell out plainly, you refer to these terms. Why is it important? When we walk through our later slides, you'll have a better clarity. Why is that we are reading on this? So it says the law addresses, and to spell out plainly without any confusion the consequences of failure to discharge the obligations cast by the law. Then the 4 sections of the Act fall miles short of the desired objective. So if there is a clarity which is missing in the law for guiding the taxpayer, the objective of the law it has fallen miles short of the desired objective. Even as originally cast, the provisions were far from very happily framed and worded. Now this is a language picked up for the simple reason, when we read the Bare Act, this is the common man's pulse. Further to say, subjected to amendments from time to time, those provisions have now become so complicated that in order to discern their meaning, it becomes necessary to read them back and forth several times. Absolutely, this is one para which we need to really appreciate. Let me read the last 3 lines. Subjected to amendments from time to time, those provisions have now become so complicated that in order to discern their meaning, it becomes necessary to read them back and forth several times. So those people who have read the taxation, if you have read direct tax, if you have read indirect tax, there are multiple amendments. Every year, whenever there is a finance budget presentation happening, the finance minister comes with the amendments to the law. Now, this is what makes the subject very, very complicated. Further to say, para 10, we see no reason why 2 periods for which interest is leviable may not be put together and dealt with one consolidated provision instead of being split up in sections 11A and 11AB. So they say, why should you have 2 sections? Why can't you have 1 section when you want to recover something called interest? Also, there is much scope to reorganize all the different subsections of section 11A and to present the scheme of that section in a more coherent and readable form. Be that as it may, in the case in the hand, we have to deal with the law as it stands now. Now, friends, why I have brought this para? Just to bring your attention to this particular case law, and also just to bring what is there in your mind. Most of you who have not exposed to indirect taxation, this is the feeling what you have. People think of indirect taxation, many things to read, many provisions to update, co-linking of various provisions. When we go through our presentation, I'll also take you through how we have to knit the different learnings. We have already read something on section 7, which deals with your supply. We also have covered, if you recollect, previous 2 sessions, what was conducted on indirect taxation. You have got familiarity with section 9, which deals with your levy. Section 9, subsection 1, which deals with your forward charge. 9.3 and 9.4, which deals with your reverse charge. Now, there are multiple provisions which have to be interlinked to understand the objective of the law, to understand the intent of the law. Now, this particular case law, I'll just come with the background this way. This entity called Steel Authority of India Limited, this entity for short form I'll call as SAIL, Steel Authority of India Limited, SAIL. SAIL has a contract with Indian Railways. Contract with Indian Railways for what? Supply of rail material, supply of rails, supply of rail and rail material. Now, when I say rail, it's all the bogie which is built by this entity called Steel Authority of India Limited. So this entity, SAIL, got into a contract with Indian Railways for supply of rails. Now, imagine the costing element, imagine the pricing factor. It is absolutely not possible to embed a pricing structure before even a sale takes place. Now imagine this position of Steel Authority of India Limited with IRCTC. When a rail has to be constructed and to be delivered, this activity gets undertaken over a period of year. Now, You cannot wait for the project to get over. You cannot raise the bill upfront. What you will do, you raise a periodical billing for the different bogies which you are supplying. Now here we pick a topic from your costing called standard costing. So when I bill on Indian Railways for the value of material which I have supplied, I refer to something called standard costing, not the actual costing, for the simple reason it is highly impracticable. It is highly impracticable to set a price before the rail is delivered to IRCT, Indian Railways. For that reason, they have something called standard costing. Now we have learned something called variance analysis. Standard cost versus actuals. When I compare, there is a deviation which is called variance analysis. So this particular entity called Steel Authority of India Limited have quantified January 2005 till June 2006, a period of 1.5 years. Every 1 year or 1.5 years, both the entities sit together, they prepare a cost sheet, they examine what was the cost incurred for this particular project, what was the amount billed, what is the amount to be further billed, was there a excess billing, was there a short billing. Now when we compare these two elements, there was a element called short billing which was come out of your variance analysis. So this entity called Steel Authority of India Limited on June 2006, for the period January 2005 till June 2006, that period of 1.5 years, they have worked out the price what is to be collected from Indian Railways. On that particular sum, they have quantified a duty, excise duty. Those days we had central excise, so they have quantified an element of excise duty which worked out to rupees 143 crores, 142.78 crores. On that 142.78 crores in June 2006, SAIL have raised the bill on Indian Railways and recovered that money with the duty. All is good enough till now. Now, what happened? The excise authorities have come back to this entity called SAIL saying that, Baba, you have paid a sum of 142 crores. I agree and I admit that you have paid. This 142 crores ought to have been paid on January 2005, but you have paid on June 2006. Because there is a gap of 1.5 years, for that 1.5 years, there was a duty demand of 142.78 crores. Along with that, an interest element of 15 crores, 51 lakhs. So what they have said, look, you have short paid the tax. Because there was a short payment of tax, you ought to pay interest on that particular element of duty. Now the whole crux of this discussion comes to one is valuation. The time when I have removed the goods, what is the value I have adopted? If I have stuck to that value, and in the process of my negotiation, in the process of my contract, over a period of time, there is a upward movement, or if there is a downward movement, that upward movement where we call as supplementary invoice or we raise a debit note. If there is a downward movement, we raise something called credit note. This particular mechanism where there is a differential duty, differential tax ought to be paid. What does the law say to identify what is the point in time when we are supposed to pay the tax? This is the first element which is relevant for us to understand from this particular case law. Now, when we are talking about this case law, there was one more beautiful case law, MRF Limited versus Chief Collector, where this entity called MRF Limited, way back in 1983, I'm talking way back 1983, they have a contract tied up with the various government authorities. Say an example, MRF Limited has to supply tiles to the state government of Gujarat, state government of Haryana, state government of Tamil Nadu, state government of Andhra Pradesh. Now what happens? These authorities set a price for supply. Subsequent to supplying, the state authorities have come back and say, look, I have quoted a price of 8,000 per tile. Now let us reduce that 8,000 to 7,500. This entity called MRF Limited went back to the central excise authorities and said, look, I have paid per tile 8,000 on which excise duty was paid. Subsequent to sale of this tile, the local authorities, that is the state authority, has come back and said, instead of 8,000, we are ready to pay you only 7,500. So charge duty on 7,500, or I'm ready to pay you only on 7,500. So this authority, this MRF Limited filed an application with the department saying that, look, I have paid you duty on 8,000. Now subsequently there was a revision in the price. Whatever excess duty I have paid, kindly give me back the refund of that. This particular argument was not accepted by the departmental authorities. They said, look, when you have removed your tires, when you have supplied your tires, the price which was fixed, was it fixed upon? Yes. Now, subsequently, if there is a reduction, we are not a party to it, and you cannot come back to us and claim for the refund. The same argument was taken by Steel Authority of India Limited to the Honorable Supreme Court, saying that, my lord, in case of MRF Limited, you have fixed upon a price which is prevalent on the date of raising invoice. Even in my case, on the day, January 2005, when I have raised my invoice, that was the only price agreed upon. Will there be an increase in the price? That is escalation. Will there be a reduction in price? Reduction. I'm not sure. So, whatever duty is casted on me because of the revision in price, in June 2006, I have paid that amount. When I have paid that amount, kindly don't demand from January 2005 till June 2006, entire this period, as if there is a short payment of duty. This was the argument which was put forth before Honorable Supreme Court. Now, this is one case law which is very, very important for us to appreciate this particular topic called value of supply valuation, and also to fix upon something called time of supply. So friends, with this backdrop, I'll come to our learning for today's session. Now, when we are reading this particular chapter 6, which deals with your time of supply, we have to deal with your section 9.3.9.4. Section 9.3 and 9.4, which deals with your levy. Section 9 deals with your levy. 9.3 and 9.4 deals with your reverse charge mechanism. So this chapter called your time of supply has been interlinked with your section 9, that is your levy. Section 12, 13, 14. These are the three sections which are relevant for our today's discussion. Section 12 deals with your time of supply for goods. 13 for service. Change in the very important section which deals with your tax invoice. Friends, I have shared the working notes. You keep the working notes handy with you. In appropriate time, I'll take your attention back to the working notes to make you understand this section 31 when we read these two provisions called section 12, section 13. Now, for people who are not much into taxation, who have not dealt with indirect taxation in the process of your internship, I'll put it in simple terms for you. This particular section 31 deals with tax invoice. That means when someone has to issue a tax invoice, what are the details we have to present in my tax invoice? Now, when we are talking, why is that this in detail discussion is happening? I refer back to my first slide where this Steel Authority of India Limited Supreme Court citation I brought in. To the extent possible, there should be a clarity in the provision for understanding and taxation. Next provision, section 37, section 39. Section 37 deals with your returns. 37, 38, 39 deals with your returns. 37 is your outward supply statement. Right now we call GSTR 1. 39 is your monthly or quarterly periodical statement, which is called technically right now GSTR 3B. So these two returns, one is a statement called outward supply statement. Another is a return called monthly return. These two provisions are relevant with my time of supply. Next is your section 50. Section 50, which deals with your interest provisions, computation of interest. Now, once you get qualified and once you get into the corporate world or once you get into your practice, day in, day out, you deal with the practical scenario, which is more linked with this particular presentation of today. Today's presentation, tomorrow, both the sessions, time of supply and value of supply, plays a dominant role, either you're in corporate or you're in practice, to deal with the government authorities. How? We will see a couple of examples to get a clarity on this particular aspect. Finally, section 142, section 143. Section 142 is a miscellaneous transitional provisions, a very, very important section which one has to read through under GST law. Section 143, which deals with your job work provisions. I have taken a couple of examples to make you clear why we have to read through these sections. I'll put my best efforts to cover these provisions when we go through our today's topic of time of supply. To start with, we will understand a couple of definitions. First definition is your associated enterprises. As we all know, everyone is having a flavor to income tax. The moment I talk about your income tax associated enterprises, everyone gets correlated with this section 92A. So this is one provision not requiring much introduction. However, let us understand this definition from GST law. It says the term associated enterprises shall have the same meaning assigned to in section 92A of Income Tax Act. What is there? Broadly, associated enterprises in relation to another associated enterprise means one entity, when I look from other entity perspective, an enterprise which participates directly or indirectly. So there is one entity called ABC Limited. There is another entity called PQR Limited. So one entity participates directly or indirectly. How? Or through one or more intermediary. So it is participating directly by way of a shareholding pattern, by way of a managerial control, by way of an investment, whatever it is, there is a control. Or one or more intermediaries. Through an intermediary, there is a control being vested. That is the reason they say directly or indirectly. In the management or control or capital. So these are the three elements relevant for you. There is a interest in management, that is your board of directors. There is a control where by virtue of your shareholding or voting rights, by virtue of your capital, that is your investment, direct investments or indirect investment through a journal, JV. So this is one definition which is relevant for our associated enterprises. There will be one practical issue whenever you deal with corporates where there is a parent company which is abroad. Say there is a parent company in Germany, there is a head office in US. They are controlling the branch in India. Whenever there is a transaction between parent company to the sister company, when we deal with section 13, I'll have a detailed discussion on this particular associated enterprises. Next definition, reverse charge. As we have already studied in our levy, which is under 9.3 and 9.4. Simple terms, whenever there is a liability to pay tax, refer to the term liability. Liability for what? To pay the tax. Liability to pay tax, when you say the term tax, we are studying GST law, the tax under GST law. So whenever there is a liability to pay the tax, by whom? By the recipient of goods or services, or both. Instead of supplier, for that supply of such goods or services, which is covered under section 9.3 or 9.4. This is one definition which deals with your reverse charge. So whenever you audit the corporate, the entities, whenever you audit a particular client, you need to understand, you need to look into the transactions. Are there any transactions in the given set of financial records which is having a levy under section 9.3 or which is having a levy under section 9.4? I repeat, whenever we are doing audit of an entity, we need to keep in mind whether there are any transactions in the books of accounts where there is a levy covered under 9.3, levy covered under 9.4. If at all if there is a levy, then that is called as a reverse charge. So whenever there is a reverse charge, we need to come back to this chapter, that is section 13 or section 12, which deals with your time of supply. Again, what is time of supply? All along I have been talking time of supply. Simple terms, the time when your liability gets crystallized. For what? For remittance of taxes. That is called as my time of supply. So wherever there is a supply, we have already read section 7, which deals with the supply. What is my supply? Supply is to do with the transaction wherever there is a sale, barter, exchange, license, lease, rental, license, or your disposal. Any of these modes trigger, then that is called as your supply under section 7. When there is a supply and when there is a levy under section 9, we come to determine something called payment of tax. We will just have a clarity on that in a while. Now, before we start with the main topic for today's discussion, I have brought in couple of examples. For you to understand. This example will give a clarity. What is that I have to study from my time of supply? When we read this particular chapter called time of supply, what is that we get a clarity for this particular time of supply? How do we apply in our practical scenario, practical world? That also we will get to know from these examples. First example, Mr. A, registered person in Bangalore. Mr. A, registered person in Bangalore, makes supply of goods for rupees 20 lakhs. Makes supply of goods for rupees 20 lakhs. So this gentleman A is a person who is registered in Bangalore. So this gentleman is making a supply of goods for rupees 20 lakhs. GST is applicable at the rate of rupees 3.6 lakhs to a customer in Delhi. Now, whenever I talk about a transaction, supplier is in Bangalore, customer is in Delhi. I think you have all read through your place of supply provisions. Can someone clarify? Can someone confirm in the chat box? Should I charge CGST, SGST, or should I charge IGST? Can you confirm what is the tax you are going to pay? Should I pay IGST or should I pay CGST and SGST? Okay, we have to pay IGST because it is an interstate supply. Got it? Now, coming back. Goods were dispatched on 28th of March 2020 on FOR basis. Goods have been dispatched on 28th of March on FOR basis. Understand carefully. Whenever we do audit, reference to auditing, reference to law paper is something which is relevant in the practical scenario. For the simple reason, when we do audit of our sales as on 31st March, when we do the revenue recognition, we refer to something called commercial terms. The terms of sale, when we refer to our Sale of Goods Act, the ownership which gets passed on, at the factory gate of my factory gate, that is defined as something. When the ownership gets passed on at the factory gate of my customer, that is called as something. These are something called commercial terms. One is X works, second is CIF. X works is a commercial term where the risk and rewards, the ownership gets passed on at the factory gate of the supplier. In this example, Mr. A, we have referred to a language called FOR basis, free on road. This is similar to your CIF contract, that is cost, insurance and freight. So as on 28th March, this was the supply which is on FOR basis. Goods have been received by the customer on 5th May 2020. This example has been set considering the COVID pandemic situation where the goods were dispatched on 28th March, but physically the goods were received on 5th May 2020 by the customer. Thus, Mr. A needs to pay GST for the above supply during March 2020. Now, in the given transaction, let us understand this way. This gentleman, Mr. A, has supplied the goods to whom there is a customer in Delhi. Now, on 28th March, the terms of contract is FOR, free on road. That means to say, until the goods are received by my customer in Delhi, I don't call that as a sale for the purpose of revenue recognition or Sale of Goods Act. Now, at this moment, this particular transaction, which was reported on 28th March in my sale register, when I file my return for the month of March 2020, the question here is, should I pay the tax on this particular supply in the month of March 2020? Now, this is considering my pandemic scenario. Now, you may have various answers. You can very well put it in your chat box. What we will do, end of a couple of provisions, we'll come back to this particular practical example to understand. We'll come back to this problem to understand what would be your answer. Okay. Coming back. Now, my returns for March 2020, generally for March 20 on or before 20th of April 20, I have to pay my tax, and also I am supposed to file my monthly return under section 39. Government has extended the due date till 30th June 2020. Now, this is an example set in the backdrop of your COVID pandemic. Now, the question comes here is, this gentleman, Mr. A, because he has raised a tax invoice, now, should he need to raise a tax invoice? Again, the answer comes here is yes. We have used a language called makes supply of goods. Make supply of goods. You can make a note of this. Whenever we use the term supply, we have to refer back to section 7. Section 7, there is a language used called sale of goods. Now, sale. When I refer to the term sale, I have to refer to my Transfer of Property Act. Also, I have to refer to my Sale of Goods Act. The term the sale connotes there is an intent to transfer title in either goods or in a property. So whenever there is an intent to transfer, that I call as a sale. For the purpose of revenue recognition, I may not recognize that as a sale. Now, when I close my books of accounts and as on March 2020, there is a technical term called GIT, goods in transit. What do I do with that GIT? I reverse my revenue to that extent. What I say as an auditor, look, my accounting standard says you can recognize the revenue only when there is a risk and rewards transfer. Now, what we will do, we will get into the GST law, we will get into section 12, we will get into section 13 to understand what we have understood from our accounting standards, what we have understood from the law paper, that is your Sale of Goods Act or your Contract Act, whether the same understanding is there in your GST law. For the moment, you can record your answer. You can record your answer with reasoning, whatever you have. Once we cover our section 12, we will come back to this particular example to get a clarity. Now, this particular question further, if we tweak this particular question slightly little more, if the goods were not accepted by the customer on 5th May. Now, thankfully, 30th for the month of March, 30th June 2020 is my due date. Take it from me, friends. Whoever is listening to me, post qualification, invariably you get into a seat where you process the returns. Invariably, you get elevated in the corporate, you get elevated in your profession, in the practice, where you have to guide, you have to direct your juniors, you have to direct your team. What should be the decisions taken? Now, this scenario, my March 2020 return, assuming I have come in the month of May, 10th May, my factory is open because of the lockdown norms and other things. I have come and resumed my job on 10th May. On 10th May, I get to know that this customer for whom I have supplied the goods, he has rejected the goods. Now, the moment the goods are rejected, it is going to come back to my factory. I have to file my return for the month of March 2020. When I file my return for the month of March 2020, as on 20th April, I have not filed return. Everywhere there is a lockdown, everywhere there is a seal down, I have not filed. On 10th May, I have come back to my factory. When I have come back, I have noticed that there is a transaction on 28th March. This transaction 28th March, I completely got to know that this customer has not accepted the goods. When I file my return for March, when I have to pay taxes for the month of March, now point comes here is, should I pay the taxes? Should I pay the tax of 3.6 lakhs on this particular transaction? Understand? 3.6 lakhs is a tax element burden. The moment I commit for the tax, which is not to be payable, there is a working capital issue. Once I pay the tax, getting back that money as a refund, getting back that money as an adjustment, absolutely a big debate. So once you get into corporate world, arrangement of funds, compliance with the law, everything matters. So we will come back and we'll understand what is the law. Section 12, Section 13 talk about these particular scenario. Also, when we read this particular provision, I draw attention of you to Section 34. Now, I here and there, I'll be using a couple of section numbers. This, by practice, we get into this particular sections because we practice more in this particular arena. But however, when you are in a learning stage, I would recommend at least read once through that particular section to apply, to read and correlate with this particular provision. So when you read your section 34, which deals with your credit note, whenever there is a sale return, whenever there is a material which is rejected by the customer, I go back to section 34, which deals with my credit note. Now, there is a separate provision. I'll not discuss in detail with your section 34. I'll just in that when we deal with this chapter, we need to look into my section 34 also. Further, on the tax invoice, Mr. A mentions the fact that goods are supplied on approval basis. Would the situation be same in relation to payment of taxes? Once we get into the corporate world, practical scenario, management ask, they will ask you, should I need to pay the tax? Is this the only way out? No, Mr. X or Mrs. X, Miss X, say you are a professional. Why don't you see where there is a way out to deal with this situation? Management is completely not okay to remit the taxes. Now, there is something like when we are reading the law, probably you would have read section 34. You would also have read section 31. When someone is reading section 31, there is a provision, section 31 subsection 5, which deals with your sale or approval basis. Now, probably one of you come forward and say, management, you will propose to your management, look, there is one provision which is section 31 subsection 7, which deals with sale or written basis. Now, once I say sale or written basis, I need not pay tax until and unless I get an approval from the customer. This is one point which you will propose. Now, these are all multiple ways which we will invent when we read the law harmoniously. So section 31 subsection 7, which deals with this provision, I have underlined the term called supplied on approval basis. I also have covered few examples. We will deal with that. So for the time being, you can make a note of section 31 bracket 7, section 31 subsection 7. Last and final, can the goods occasion its movement without a tax invoice? Now, again, after reading all these things, some of you would have already framed an answer in your mind. So why should I raise a tax invoice? Rather, send it on delivery challan, send it on some other document. The moment you say raise a tax invoice, you ought to pay the tax. The moment you don't raise a tax invoice, you're saved. So why can't you think of that particular option? Probably. I'm just putting food for thought. When we come to section 12, also when we read section 31, this last point which I have written, can the goods occasion its movement without a tax invoice? Now again, friends, take it from me. This is not a tax evasion. This is a tax planning. Again, when we do a tax planning, when we need to have a thorough understanding on the tax laws, all the provisions. You need to have supply provision. You need to know the documentation provision. You need to know the returns provision. All this we need to have a gamut. So this example at this moment is talking about a scenario. Where there is a mechanism. Can I not pay taxes? Can I get into a scenario where I don't pay the tax because it is not accepted by the customer? Though I have raised a tax invoice, can I say that, look, the tax officer, it is on sale or written basis. I am not going to pay the tax because it has not been accepted by the customer. Now, these are all the thought process which have come into my mind. Now, I could see that couple of you have already put your comments in the chat box. Very valid comments. What I would do is answer at this moment. Let us not conclude. We'll read section 12. Again, we'll come back to this example and then have a discussion on this. Example number 2. Mrs. ABC and Co, a landlord. Now, this example, I'll also explain why this example was picked up. You are a professional. You're going to be a professional. You should have an art. You should have a skill of vetting the contracts, drafting the contracts, reading the contracts in between the lines. So from that perspective, this example has been set. Mrs. ABC and Co, a landlord, entered into a rental agreement with Mrs. XYZ Limited. So the landlord is ABC and the lessee tenant is XYZ Limited for renting of a immovable property for a period of 11 months. Why 11 months? Transfer Property Act, generally there is a reference to your lease documents, lease contracts, there is a tenure of 11 months. So this contract of renting was entered into for a period of 11 months. This tenure is commencing from 1st April 2020. Again, from the backdrop of your COVID-19 pandemic, these examples are set. As per the agreement, my monthly rentals are applicable at rupees 2 lakhs. So there is a contract. There is a tenant who has approached the landlord. Landlord says, hey, look, this is my premises. 1st April, I'll give the right to access. And because of that right to access, monthly you pay me a sum of rupees 2 lakhs as my consideration. That is your rental. Now, look at the question. First question. What happens if Mrs. XYZ took the possession from June 2020? Instead of taking the possession from 1st April, reason pandemic, everyone is at a standstill position. This tenant comes to the landlord and says, hey, look, because of this pandemic, I'm not going to take the possession. I'll take the possession only from June 2020. Question comes here. I as a landlord, should I need to pay tax on the 2 lakhs? Should I need to raise a tax invoice on that particular sum of rupees 2 lakhs? Straight away, there will be a definite answer called no, I would understand. But again, you being a professional, you have to guide the assessee. You have to guide the assessee from the law complaints point of view. There is a contract, and this contract started from 1st April. What happens if XYZ took the possession from June 20? Now, assuming for a moment, after the month gets over, I raise an invoice. I, being a landlord, because the possession is taken from June 20, on 30th June, I'm going to raise a bill for 2 lakhs. Can the officer, government officer, come and say to this landlord, April, May, you're supposed to raise a bill, you've not raised a bill, so I'm going to recover that 2 lakhs on that 18% GST. Can the officer raise a command on that? Now, if your answer is no, how can you protect the interest of the landlord, protect the interest of the tenant? Sir, I have exchanged a mail, I have called over phone, I have sent a WhatsApp message, I have sent a normal message. Now, there are different modes of communication. This is also important from documentation perspective. When I'm talking through the examples, I'm talking with the compliances, I'm talking with the complications in the contract, I'm also talking with the documentary compliance requirement. What would be the scenario if the agreement commences on 20th April instead of 1st April? For a moment, let us assume that this tenant has taken the possession since 1st April, but he would like to commence this rentals from 20th April. Can he do so? Answer is yes. Now, what is the documentation required? Now, mutually you have understood. Contract you have signed at 1st April, but this gentleman has taken the possession on 20th April. Now, if I raise a bill on 30th April, 10 days, 11 days, the tenant has occupied the premises, so I'll raise a bill for 10 or 11 days. Can the officer accept that particular thing? Again, the question comes. Assuming this particular 20th April till 30th April, say 11 days is the period. For that 11 days, instead of raising bill on 30th April, if I raise on 30th June, if I raise on 31st May, what will happen? My liability, what is getting crystallized? What is the point in time where I have to pay my tax? When I read my section 13, I'll get a clarity on this particular question. What would be the scenario if XYZ Limited vacates the premises after 6 months without any notice? Runaway case, most of the cases, this COVID-19, we had a tough time. All these big institutions, they have not paid rentals for 2 months, 3 months together. And the department offices are pushing the landlord. Look, you have not filed your return. Look, you have not paid the taxes. Monthly, you have been paying 1 crore as a tax. This month, you have not paid. All these big shopping malls, etc. Huge dearth of revenue. Now, this is one contract which is dealing with your time of supply. If there is no rentals collected, what is the time of supply which is discussed in section 13, read with section 13, read with section 31. Section 13(1)(3) read with section 31(3)(1) talks about your tax invoice. Look at the palindrome. Section 13, time of supply for services. Section 31 deals with your tax invoice. These two aspects we will read when we read our section 13. Third example. Now this is very good example which is set from the backdrop of section 22 which deals with your registration, also with your time of supply and place of supply. Mrs. ABC & Co., a manufacturer of air compressor. There's one entity called ABC & Co. These guys are into manufacturing activity of air compressor. They are registered in the state of Gujarat. They participate in a trade exhibition for display of the air compressor manufactured by them. I'll stop here. This entity called ABC & Co., who is into manufacturing activity, what they have done? They are in Gujarat. They have traveled. They have traveled to this place called. They have participated in a trade exhibition. Now, this trade exhibition could be in the state of Gujarat. This entity called Mrs. PRN Limited have expressed their interest to procure the above air compressor for a price of rupees 50 lakhs. So there is a buyer who has come forward to buy this particular material. Does the supply occur on removal or even without removal? Now the question here is, we are reading time of supply, sale of goods. Now on 1st April, I have moved the material from my factory to the trade exhibition. Trade exhibition on say 15th of April or 15th of May, the customer PR Limited came and said, look, I want to buy this air compressor. Now this entity ABC, instead of getting back this air compressor, again incurring transportation costs, straight away they want like to sell this particular air compressor. The question comes here, time of supply. Will the supply get triggered the day when I have removed from the factory, or the supply gets triggered when this entity called PR Limited have expressed their intent to buy this particular air compressor? What if Mrs. ABC & Co have participated in the state of Tamil Nadu for trade exhibition? This is a practical scenario where most of these big corporates do in their trade practice. From one state, they travel to another state for expansion of business purpose. Assuming this gentleman has come all the way from Gujarat to Tamil Nadu and they have entered into a sale contract. Section 22 deals with your registration, then your place of supply. These two are aspects which are relevant from this particular example. This is the last example. I'll quickly run through this example. This is an example set in the backdrop of section 142. Section 142, which deals with your transitional provisions, miscellaneous transitional provisions. Again, examination, this is little important, where there are swap over transactions from previous era, that is Central Excise and VAT to GST. Mr. A makes a supply of goods to a customer on 30th June, which attracts Central Excise of 12% and VAT. Cumulative 12% plus 14.5 may not be 26.5. Like cascading effect of taxes was there under earlier law, comes around some 27 odd. The same goods were taxable under GST at the rate of 18%. What is the time of supply? If the goods are billed on 30th June, payment is received on 1st July. Very tricky thing. 30th June, I have raised an invoice under Central Excise. 1st July, I have received money under GST era. Can the officer say you pay GST? Section 142 deals with this particular provision. Billed on 1st July, that is under GST era. Payment was received on 1st July. I have billed on 1st July, payment was also received on 1st July. Again, section 142, which deals with your provisions. Though I have supplied prior to GST, billed on 1st July, then it is dealt with my section 142 under GST era. Goods are written back by customer on 1st July. Assuming I have billed on 30th June, goods are written on 1st July. What will happen? Should I raise a credit note under GST law section 34, or should I issue a credit note under erstwhile VAT laws? That is the question. So section 142 deals with this particular provision. Now, to start with our time of supply, all examples, whatever I have said, this is a one slide which recaps your entire syllabus. First and foremost, section 7. Look for the transaction. Please watch your transactions, watch your examples carefully. Supply as per section 7, read with schedule 1, incidence of GST. Was that transaction attracting the provisions of section 7, that is which deals with your supply? Already we have discussed with supply where there are 8 elements of supply: sale, barter, transfer, exchange, etc. If at all, this transaction what we are looking into, was it fitting into the provisions of section 7? Answer is yes. Then look into the next provision called section 9, which deals with your levy. There is a supply, that is there is a sale. For that sale, there is a levy under section 9. When I say there is a levy, there is a taxability. For a transaction which has been called as a supply, that particular supply is subjected to a levy under section 9. If answer to these two questions are yes, then I'll come into this chapter 6, which deals with your time of supply. So in this particular chapter, what we do is, what is my time of supply? That is, what is the point in time? When should I pay tax to the government authorities? First case law, what I have picked up, Steel Authority of India Limited. My chapter 7, which deals with your value of supply. chapter 6, which deals with your time of supply. These two chapters is revolving around this particular slide. If you can understand this slide carefully, perfectly, my entire discussion on time of supply, my entire discussion on value of supply is thoroughly understood. So, is this particular slide clear enough? Section 7 deals with your supply. Section 9, which deals with your levy. Then, if these two aspects are met, supply is there. Like I'll give an example. I have intended to sell my laptop. Now, section 7. When I say sell is referred to sale in my supply. So there is a sale under section 7. The moment there is a reference to say, yes, it is a supply under section 7. The next question comes, is there a levy under section 9 subsection 1 under this laptop? There is a chapter code, chapter 84 deals with your electronic products where there is an entry for 28%. Yes, there is a levy. Then the next question is determining time of supply. For this transaction where Praveen has an intention to sell the laptop, what is the time of supply? What is the point in time? What is the time when the GST needs to be paid to the government? This is what we study under this particular chapter called 6. Now, I'll just quickly check if any of you have any of queries posted, so that I'll just quickly address that and then move on to our present discussion. Okay, fine. Perfectly. Like I can see most of you have given answers. Most of you have given answers to examples what we have discussed. Now we'll come back to our chapter, that is your section 12, which deals with your time of supply for goods. Now section 12, it's a provision which is dealing with your time of supply for goods. Time of supply as per this provision shall be earlier of the following. My time of supply is determination of a time of supply, the point when I have to pay tax. It says my time of supply shall be earlier of the following. First one, date of issue of invoice by the supplier, or the last date is required to issue with respect to the supply. So this particular provision says, section 12 subsection 2, date of issue of invoice by the supplier. Look, your supplier has issued an invoice, or it is a conjunction, date of invoice or the last date he is required to issue with respect to the supply. Now this indicates that as per section 12, look, if you have issued a tax invoice, that is the date when your liability gets crystallized, or last date he is required to issue. How do I know? I have sold a laptop to a particular customer, say on 31st May 2020. If I raise a invoice on instead of 31st May, if I raise an invoice on say 30th June, why do I raise on 30th June? I received money from my customer on 30th June. I opt to raise invoice on 30th June. Answer would be here they're trying to say, look, if you have raised a tax invoice, I'll go with your tax invoice, or the last date he is required to issue. Now, what is that last date? My section 31. In a while, we'll understand how do we interpret, how do we get to know what is my last date I can issue my invoice. The date on which supplier receives the payment with respect to the supply, or the date on which supplier receives the payment with respect to the supply. So, in simple terms, my section 12 says, look, date on which you have raised tax invoice, or date on which you have received the payment, either of these two, earlier of these two, shall be the date when your liability gets crystallized. So here they have used two terms. One is date of issue of invoice. Second is your date of payment. Whenever we look into this date of issue of invoice, please read that there is section 31 which says this language used. The last date is required to issue the invoice. So as of now, section 12 says that earlier of these two, if you have raised a tax invoice or if you have received the payment, earlier of these two shall be your time of supply. That is the point in time when my liability gets crystallized. provided that if the supplier of goods receives an amount up to 1000 rupees in excess of the amount indicated in the tax invoice, time of supply shall be at the option of the supplier, be the date of issue of invoice. The provision says, look, you have raised the invoice for 50,000. You received the money from the customer for 50,500. Some reason, excess remittance or by oversight or some reason you have received excess money. The section 12 says that if at all you have received a money excess up to a sum of rupees 1000 compared to the amount indicated in the tax invoice, the time of supply shall be at the option of the supplier. The supplier is an option. The supplier is an option to raise the invoice whenever he would like to. Whenever he raises the invoice, that shall be your time of supply. So time being, when we read your section 12, please keep in mind. Section 12 deals with the provision where I determine my tax liability. When I have raised the invoice. Now there is a time limit given for the raising of invoice. We'll cover in detail little later. So if I have raised the invoice, that is the time when my liability gets crystallized. Or if I have received money, that is in advance. Before I raise the invoice, I have received money in advance. So if payment comes prior to raising of invoice, so one event called invoice, another event called payment. If I get payment prior to issuing of invoice, I call this as advance. So either on advance or issuance of invoice, either of these two, my time of supply gets crystallized. Now, at this moment, please understand that time of supply, there is a tax invoice which is linked with the last date he is required to issue. Now, note, as per section 31, a tax invoice has to be issued when I have to issue before or at the time of removal. Please underline this term. My tax invoice has to be issued before or at the time of removal. For what? Removal of goods for supply to the recipient. Please refer to the language. This language used, a tax invoice to be issued when I have to issue before or at the time of removal of goods for supply to the recipient. Now at this moment, I'll ask many of you to go back to your answers when we are discussing the examples. First example, 3.6 lakhs, what we were talking. First example, 3.6 lakhs, which I was talking. Most of us have raised. Why don't we say that it is on sale or approval basis where the 3.6 lakhs can be saved? Look at the language used in section 31. A tax invoice to be issued before, again, language is to be issued. I have to issue but not issued. Someone may ask, sir, what will happen if I don't raise a tax invoice? Now, I have a practice. Only when I receive the money, I'll raise a tax invoice. Now, whenever there is an inspection, whenever there is an inquiry, whenever there is an investigation, referring to section 122, section 122 deals with your penal provisions. My penalty is equivalent to the tax amount. Assuming right now the tax amount, assuming it is 18%, my penalty is equivalent to 18%. Also, top of that, interest is applicable. Please look at the from the customer's perspective. When we read the provision, I have to comply with the law because section 31 says that I have to issue an invoice. Why? When before or at the time of removal. Now I am removing the goods on 28th April. On 28th April, I have to have an invoice. When should I raise an invoice? Goods are meant for supply. If the goods are meant for supply, I have to raise a tax invoice. If the goods are not meant for supply, I can send on a delivery challan. So the underlying principle is when the goods are meant for supply. Now, Accounting Standard 9, it says revenue recognition only risk and rewards. GST law does not say all these things. Look, it is meant for supply, risk and rewards, ex-works, FOR, CAF, all these commercial terms I am not bothered with. So section 12 clearly says that I have to raise a tax invoice. Before or at the time of removal of goods, which is meant for supply. To whom? To the recipient. Or making available of goods. Last line, making available of goods. When you read this language, making available. What is that making available? I can understand that movement of goods. Like when I have interest to sell the laptop, I put it to courier or transport and that reaches to a customer. Making availability of goods. Now this covers like as we have read the definition of goods. Goods means something which is tangible, which is movable in nature. When I make available of the goods, take example of a big machinery I have to supply to say Hindustan Aeronautical Limited, HAL. HAL wants to have a chiller plant. Chiller plant is a cooling plant which has a capacity to withstand the heating capacity up to 100 degrees Celsius. In the process of manufacturing activity, when there is a heat process involved, I need to have a chiller to bring down the temperature. Now, to have that, I need to have a chiller. Usually, chiller will be of a size of probably I would say, when you talk in terms of square feet, if you have, it will be around 20 to 40 square feet by 40 to 50 square feet. So it is as good as a big compound wall. This particular size. Now it is not possible. I manufacture in my factory, I put onto lorry and go and give delivery to HAL. No. I'll take in dismantle condition, I'll take it to the customer side, I do the installation activity, erect the machinery and give as it is as a machinery. Making available of goods. That is what section 31 refers to. Now friends, look at the language they have used in the first line. Date of issue of invoice by the supplier or last date is required to issue. So in case of movement of goods, before or at the removal, before or at the time of removal, in case where there is no movement required, when you make the goods available, that is the point in time when your section 12 comes into picture, which gives a clarity how to determine your time of supply. At this moment, do you have any doubts on this particular discussion till now, whatever we have discussed? Let me know in your questionnaire answer section, you have any doubts on section 12 which deals with your goods till now, whatever we have discussed. Okay. I think so far so good. I'll come back to our discussion. Yeah. So section 12, this deals with your time of supply for goods where invoice is issued, payment is received, then I have to issue tax invoice. And section 31 gives a clarity, when will I raise my tax invoice. Time of supply in relation to advance payments. This is one important provision. Please expect one testing question on this particular provision. There is a reference to notification 66 of 2017, which was issued on 15th November 2017. This is one provision which was issued under section 148. Again, when I refer to this, when this is one section which has given an authority to say, in relation to goods, don't determine time of supply on advances. Please excuse advances. That means to say, when I look into my goods, if I receive money in advance prior to issuing my tax invoice, my time of supply is not applicable in relation to advance payments. So this notification 66 has withdrawn this section 12 subsection 2 clause B, which deals with my advances, For a moment, you understand that though we have read that there is an advance payment on which my time of supply gets triggered because of virtue of this notification 66 of 2017, the time of supply in relation to advances is not there. So only when I raise a tax invoice, I have my liability which gets crystallized. Now, I have just brought in section 31 again for brevity to understand. As per section 31, I have to issue tax invoice before or at the time of when removal of goods for supply to the recipient. Supply involving movement of goods. Delivery of goods or making available thereof in any other case. So in case if there is no movement of goods, whenever I make the goods available to the customer, that is the point in time when I have to raise invoice under section 31. I have given working note. If you refer to the working note, there were a couple of examples set based on your section 31. Will come in detail little later. Now, there is an ancillary provision. There is a provision in section 12 which says that government on the recommendations of the council. So GST council make a recommendations to the government saying that if at all there is a set of category of goods or set of category of supplies, we can give a relaxation. That means how to determine my time of supply. So the control is there with the government, with the GST Council. As and when they recommend, government may notify. Instead of going with your tax invoice, I may notify a different practice. That is what they say. Next. In case if I have to issue a revised tax invoice, section 31 deals with your issuance of a tax invoice. At the same time, there is one provision, section 31, which talks about issuance of a revised tax invoice. So if at all, if I have to issue a revised tax invoice, why I have to issue a revised tax invoice? I apply for registration. Now, there is one separate chapter which we deal with registration. Just keep in mind, whenever I apply for registration, all those invoices before getting my registration certificate, if I have issued a tax invoice, I can revise those tax invoices under section 12 by virtue of this section 31. Now, this is one important provision. Which is crept in section 12. I'll read through, then I'll explain this. Explanation 1. Supply shall be deemed to have been made. There is a deeming fiction. What they say, supply shall be deemed to have been made to the extent it is covered by the invoice or, as the case may be, payment. They're saying that my supply is deemed to have been made. I have used, underline this term. It is deemed to be made to the extent it is covered by an invoice or, as the case may be, payment. Why is that deeming fiction required? In section 12, they are bringing a deeming fiction. If you recollect, section 12 to issuance of a tax invoice or receipt of money, payment. I have received money prior to issuing a tax invoice. Now, all of you, I have read section 7. When you look into section 7, we have used a term called sale. Agreement to sell, sale are both one and the same. I have agreed to sell goods to my customer. Did the sale has taken place? Answer is no. It is just an agreement to sell. Sale happens only when there is a transfer of risk and rewards, when there is a transfer of ownership. But for the purpose of GST law, whenever there is a supply is that nothing but sale. By virtue of that, there is a deeming fiction even in relation to payment. Just because money has come in advance, this section 12, by virtue of explanation, they are saying that when you have received money in advance, even that advance, we deem that it has been supplied. It is deemed to have been made. To the extent you have received advance, I bring in a deeming fiction. If I don't bring in this explanation, someone will invoke Article 14. Under Constitution, there is something called Article 14, which deals with your fundamental rights. They say, my rights have been infringed. You are taxing a transaction which is not fitting into supply. Not to have that intricacy, not to have that ambiguity, they have brought in a deeming fiction in explanation to say, there could be some scenario in relation to advances which is not fitting into section 7. That also was deemed to have been completed by virtue of a section 12 for the purpose of collection of taxes. I repeat, for the purpose of collection of taxes, they have brought in a deeming fiction even in relation to my advance. Explanation number 2. Date on which supplier receives the payment shall be date on which payment is entered in his books of accounts or date on which payment is credited into the bank account. Sir, why should we explain this explanation too? Is it required to bring this basic thing also into the law by way of an explanation? Answer for that. Let us recap our first slide, which is in relation to sale. In relation to Steel Authority of India Limited, the Supreme Court have brought in their vehement expression. The law is so complicated. Law should be simple, crystal clear enough. So that is the reason they are saying, what do you understand from date of payment? Date of payment is nothing but when the supplier receives the payment, that is when he has entered in the books of accounts or the date when it is credited into the bank account. Whichever is earlier, that shall be considered as my date of payment. There should not be an argument. There should not be a vacuum. There should not be a space for interpretation. Law, taxing especially, my taxing laws should be crystal clear enough for clarification. There should not be any room for interpretational issues. For that reason, they have defined something called what is your date of payment. Next. Very good provision which deals with your continuous supply of goods. At this moment, we need to understand this provision called continuous supply of goods. First, I'll read the provision, then I'll explain what is the intent of the law in taxation of these particular transactions. In case of continuous supply of goods where successive statements of accounts or successive payments are involved, the invoice shall be issued before or at the time of each such statement is issued, or as the case may be, such payment is received. Now, a couple of examples. Making availability of oxygen in a hospital on a continuous basis. These days, if you see these larger corporates, they have something called your outsourcing of an activity, like medicine, like medicine room. They call every surgery. There are some medical equipments. There are some medicines which are required for that particular surgery. Now, that particular surgery, whatever medicines are required, that will be not under the control of a hospital, that will be under the control of a druggist. That druggist is a person who looks into the requirements of that surgery. Before even a surgery takes place, he say, this is the standard checklist, all these medicines to be kept available. Not even one medicine, there will be a shortage. There will be a surplus, rather there will not be a shortage. Second thing is your oxygen. Now, oxygen, it's like on consumption basis that keeps on get consumed. So that fellow comes and fits the cylinders whenever there is a need, like whenever a cylinder gets over, he automatically comes and refills that particular oxygen. Now, this is a case where we call it as continuous supply of goods. I keep on supplying under a contract on a continuous basis. Second example, providing drinking water at factory. I don't say, okay, you bring 10 bottles today, you bring 20 bottles tomorrow. I'll have a pantry, I have a shop floor, I have a production bay. Every point, I'll keep a BOQ. Minimum 10 PET bottles should be available on the basis of the employee count. This water person, he comes, makes a round, he ensures that out of 20 bottles, 8 are empty. He'll replenish that 8 on an immediate basis. He'll not wait to get an instruction from the management. That is another example of continuous supply of goods. Third is your provision of gas for domestic consumption. Most of you are staying in this metropolitan cities and cities. You would see all these big apartments. You don't have a gas connection where the gas cylinder comes and gets installed in your house. Rather, you just get a pipe where you plug in that to the stove. The gas flows. As you consume, so much you pay for that. It is not like a cylinder what we procure. So these three examples are the examples which talks about your continuous supply of goods. So basic background, continuous supply of goods is nothing but a contract where there is a supply which is on a continuous basis. In that case, my time of supply, what is that? Where successive statements of accounts or successive payments. When I say successive statement of accounts, generally what happens, month end, the concerned supplier will come and say, sir, this month, this is your consumption. Oxygen, as on 1st April, there are 800 ounces of oxygen. As on month end, there is 600 or some reading. He'll say this is a total inflow, the total outflow, closing balance, opening balance. This is a consumption. Based on that, he'll give you a bill. So when you give a bill, nothing but a statement, successive statements. What is a consumption? I issue a statement called consumption statement. So when you issue that statement, that is your time of supply. Or successive payments. You're not issuing a statement. You're getting a payment on a recurring basis. So whenever you receive a payment on a successive basis, that is a point in time when my time of supply gets triggered. The invoice shall be issued before or at the time, read carefully, the invoice shall be issued before or at the time when such statement or payment is concerned. So either of these two is there, then I have to trigger that this is my time of supply. So whole point here is when we deal with this continuous contracts, continuous supply of contracts, we determine my time of supply. We determine time of supply on the basis of a periodical statement or on the basis of successive payments I receive. So what if I raise a statement, I also get a payment? The answer is very simple. Now, if you issue a statement, as per the statement, whatever amount is due, that we will go for. Sir, I have issued bill for 30,000, but I have received money for 50,000. Definitely, argument will be, when you have raised a bill for 30,000, why will someone pay for 50,000? So you have either issued a wrong bill or that gentleman has paid excess. Now, if that gentleman has paid excess, to that extent, subsequently, if you are going to adjust, you can hold that excess payment. Because again, section 12 read with notification 66, advances, there is no levy. As of now, on advances, there is no levy. Sorry, time of supply is not triggered. Levy is there, time of supply is not triggered. Only when you raise a statement, if you're not raising a statement, periodically you receive money, then that is a point in time when my time of supply gets triggered. Now, this is still section 12, subsection 2 and section 12, subsection. Before I go on to subsection 3, this is our discussion. I recommend wherever you have doubts, please put into your question box so that I can take it up at that moment. You'll also have a clarity with the flow of explanation. Okay, one question has come from Mahendra. Is this explanation 1 applied to advanced receipts? Absolutely yes, Mahendra. Keeping in mind of that advances, this explanation was brought into the section 12. Then validity not for 60. Okay. Yeah. See, section notification 66 time being says that, look, time of supply is there, either issuance of a tax invoice or receipt of payment, earlier of these two. Notification 66, what it has done, it has withdrawn the payment part. That is, only tax invoice is remaining as of today. If you refer to section 12, subsection 2, there are two elements. One is advance, second is tax invoice. This notification has withdrawn my advance part. So once it is withdrawn, I've been left with only issuance of a tax invoice. So time being, only issuance of a tax invoice is relevant to trigger my time of supply. Prior to issuing this particular notification 66, by virtue of this explanation, they wanted to fix the tax on either advance or issuance of invoice. With this backdrop, they have brought in this explanation. Reason, my section 7 does not deal with your advances. To put an end to that, this was crept into your section 12. This is a backdrop for that particular thing. Okay. Now we'll come back. There are no further doubts on this. Then we'll come back to our discussion. Yeah. Now, section 12, subsection 3. It is linking with your reverse charge payments. What does it say? Now, keep in mind. When we look into the books of accounts, there are certain transactions, there are certain purchases where there is a levy attracting under 9(3). That is the point in time we need to come into this time of supply, section 12, subsection 3, to get a clarity when I have to pay the tax. Law says that earlier of date of receipt of goods or date of payment as entered in the books of accounts or date of debit in the bank account, whichever is earlier. So point number A, it says when you receive date of receipt of goods. Now again, as a professional, it is not a mere date of receipt of goods. We need to establish a documentary evidence. What do you mean by date of receipt of goods? For a limited understanding, right now I'm not dealing with input tax. We will have a detailed understanding when we read section 16. For limited understanding, when you're reading this provision, I request you to refer to section 16, section 16, subsection 2, which deals with your input tax credit. Section 16, subsection 2, which deals with your input tax credit, where they have explained what do you understand by receipt of goods. When would you say receipt of goods have taken place? They have given an explanation. When the goods are supplied, by the supplier to the recipient or to any other party, supplied to a recipient, clear. Instead of supplier, any other party, any other third person. This third person could be acting as an agent on behalf of the recipient or otherwise in the process of movement, before the movement, after the movement, either by way of transfer of title or otherwise. This is how the language was used in your section 16, subsection 2. Now here, when I say date of receipt of goods, if I get the goods, assuming that it is an ex work transaction, that means my supplier, for a moment, let me understand this way. I am located, my office is in, say, Chennai, Tamil Nadu. In Tamil Nadu, in Chennai, I have my factory. My supplier is there in Maharashtra. Say Pune, I have to pick the material. My supplier says, look, boss, this is X works transaction. That means once the material crosses the factory gate, supplier has no responsibility on the material. X works factory gate of supplier. Can I call that as receipt of goods? The goods were loaded into the vehicle, transport vehicle of my transporter. Can I call receipt of goods? Reference to section 16, subsection 2, explanation receipt of goods. I would say yes, it is a receipt of goods. Looking into the commercial terms. So here my triggering point for time of supply of goods, it says that my time of supply shall be date of receipt of goods, earlier of date of receipt or date of payment. If I have recorded in the books of accounts or debit in the bank statement, whichever is earlier. I have recorded in my books on 30th June, but 15th June the payment went to my party. So here for clause B, 15th June will be my payment. Assuming date of payment 30th May, I have booked the payment in my books as if it is paid, but 5th June, the payment was debited from the bank account. Because there is a timing gap, entry in books is 30th May, my time of supply will be 30th May. Either date of receipt of goods or date of payment, whichever is earlier shall be my time of supply. Point C. Date immediately following 30 days from the date of issue of an invoice or any other document in lieu thereof by the supplier. Now this is one tricky provision which was brought under your time of supply. Whenever we're dealing with your time of supply, majority of the times, the departmental office is going to question, look, you have paid, you are ought to pay tax under section 9, subsection 3. Have you paid? First question, have you paid? If I say yes, I have paid, then they'll come back to section 12 to say, what is the point in time you are supposed to pay and when actually you have paid? I'll give an example. 30th May, I have procured the goods. I have recorded in my books 30th May. And I made a payment on 5th June. This particular procurement, for a moment, I presume that this is a BD wrapper. The BD leaves, as per the section 9, subsection 3, there is a list of items, tobacco leaves, BD wrapper, and cashew nut, etc. So if I presume that this is one of the notified goods called cashew, I booked in my books on 30th May as my purchase. 5th June, I made the payment. But this supply, when I look into the supplier, my supplier raised the invoice on 1st April. 1st April, he has raised the invoice. On 30th May, I have booked the entry. Point number C says, date immediately following 30 days. From 1st April, 30 days, and so on, say 30th April. 30th April shall be the date of time of supply as per point C. 30 days from the date of issue of invoice or any other document in lieu of thereof. Invoice or any other document. Why they are referring to this language called invoice or any other document? For the simple reason, when we look into RCM, most of the cases, whenever we look into RCM, either my supply is unregistered party or supply is a registered party, but it is notified for reverse charge. That is the reason. If the supply is not registered, then he will issue something called invoice, not a tax invoice. Or he may simply raise a document which is called as a bill of supply or some other heading which is not in compliance with GST law, not required. That is a document. So what is the date of the document? 30 days from there will be your triggering point. So under section 12 subsection 3, only RCM cases, 3 points are relevant. When did I receive the goods? When did I make the payment for that? When is the 30 days getting over? From the date of document issued by my supplier. These are the 3 aspects. Earlier of these three is my time of supply. Now it says further, A, B, C, none of these are available. You don't have track for receipt of goods. You don't have payment details captured. You don't have a document from the supplier. Now, if you don't have these 3 elements, my time of supply shall be entry in the books of accounts of the recipient. Now, this example, this particular provision, I'll give you an example. There is a fundamental principle which is like bill to ship to. Instead of me getting the goods into my factory, I instruct my supplier to give the delivery at some particular location. I may be a dealer in between who makes a margin. Most of the business, wholesale business happens like that. If you look into the shop, that could be just 10 by 10 size. but they would be doing crores of business where they don't get actual delivery of the business. They pick from the factory gate of the supplier, manufacturer, and they give a delivery at the doorstep of my customer. So that movement happens in a bill to ship to transaction. Bill to ship to, I don't have receipt of goods. I don't have a track of payment. I don't have a track of payment to my supplier. I don't have a document to establish when supplier received the goods. In those scenarios, the time of supply should be when I have recorded in my books of accounts, when I have recorded that transaction as a purchase, because sale, money is coming into my bank account. When I book the sale, there should be corresponding purchase entry. To nullify that, if I don't book my purchase entry, profit gets shooted up. So that point in time, or that the entry which you have booked in your records, that shall be your time of supply. This is the provision which deals with your section 12 subsection 3. Next is your section 12 subsection 4. 12.4 is one transaction which deals with your vouchers. Now this is one beautiful concept which is brought into GST law, which was not dealt in our erstwhile excise or VAT laws that neatly. Now under GST, everything on earth is taxable. That is how this voucher has come into picture. Now voucher, for simple understanding, I will put it this way. Voucher is nothing but an instrument. Voucher is an instrument. This instrument has a capacity. This instrument has a capacity for what? For purchase of goods or purchase of services. So this voucher, for a moment, let us assume that it is an instrument. What is that instrument has got? It has a power. It has a power to purchase goods or to purchase services. Now here the time of supply, they say, point number A, the time of supply for that voucher will be date of issue of voucher if the supply is identified at that point. I'll give an example here. Say there is a corporate office, there is a big company. This company wants to give some books as a gift to their employees, or give some gold and jewelry ornaments. Now this entity has paid 50 lakhs to the jewelry shop owner or to the bookshop owner. They say this date, like I have 500 employees. Day 1, these are the set of employees who will come. Day 2, for 30 days, I have given different slots. Various cadre of employees will go to the shop and procure their gift. So that date which is printed on the voucher, that shall be the date of supply. Now alternatively, or date of redemption of voucher. I don't have this date printed. I'll give that voucher. I'll say whenever you want, you can go and buy. The date of redemption, whenever I go to the shop and buy the goods, that is the date, that is the time of supply. So in relation to my time of supply, what we need to understand is time of supply gets triggered when there is a date reference, date of issue of voucher. On the day I have issued the voucher, that is my time of supply. If there is no reference to date, the day when the redemption happens, that is the time of supply in all other cases. Now, we have read section 12, subsection 2, which deals with your invoice or payment, advance payment. Section 6, notification 66 says that nothing to do with your advance, only go with your tax invoice. From there, we moved on to something called continuous supply of goods, where we have understood wherever there is a successive statement, wherever there is a successive payment, that shall be your time of supply. That is your section 12, subsection 2. Section 12, subsection 3 deals with your reverse charge mechanism, where we have read 3 aspects. One, we were talking about your receipt of goods, payment to the supplier. Third is your 30 days from the end of the document. These are the 3 principles which determine my time of supply for reverse charge. 12.4, we are dealing with your vouchers, which we have discussed right now. 12.5, ancillary provision. It says 12.2, 12.3, 12.4. None of these 3 have given a clarity how to determine my time of supply. Like examples I have discussed with you, there could be a business scenario where there is no clarity how to determine my time of supply. Then this particular ancillary provision says that identification of time of supply on the basis of periodical return to be filed or date on which the tax is paid. Now, simple terms, they say, boss, when you file your return showing that this is the transaction which has taken place, or the date on which you are paying tax, that shall be the basis for determining time of supply. 99.99% you will not have this scenario which comes into. Ancillary provision, any taxation, they bring this ancillary provision, anticipating if something comes into picture, let me take a ratio under this particular provision. Now, this is one slide which was put with an example. How do we understand with this term of voucher? Very, very important. Why it is important? As I said, central excise, VAT laws and service tax law. Taxing of vouchers is one thing which was not properly dealt under GST law. It was properly brought in for taxation purpose, and sky is the limit with respect to these vouchers. Now we will understand the voucher and one slide to get a clarity of this time of supply. First, I have put something called criteria, which is a set of questions. I ask set of questions. When I have an answer for this set of questions, can I call this as money? Can I call this as a voucher? Can I call this as a loyalty point? This is something which we need to understand here. First question, instrument type. My money is nothing but this is an Indian legal tender or a foreign currency, stored value of PPA. PPA is nothing but a purchase settlement. Like it is a money, it is a payment settlement, which is a prepaid instrument. PPA is called as a prepaid instrument. I have an ATM card in an account. I have 50,000. This ATM card is a prepaid instrument having 50,000, something like that. In case of voucher, it could be a physical card or a non-physical account of cash received. This is as good as I have a voucher. This voucher could be a physical card or an voucher which is having a notional cash, which is given by the person who is issuing that voucher. In case of a big organization, take example of Infosys or a big software company. In this software companies, they have food stalls and they have various stalls. The HR department decided that, look, I'll give you a voucher. That voucher has got a date. Only on that date you can use that. Again, that voucher you can use only for food. This voucher you can use only for grocery. This voucher you can use only for apparel, textile purchase. Not like Sodexo. Sodexo is not an voucher. Understand? Sodexo is as good as money. In case of voucher, this is used for a particular purpose, defined, identified, and obligation vested with that, which is not exchanged as good as money. Coming to the other element called loyalty points. This is nothing but a points which accrue to your account for doing some transactions. It is just a points. This is nothing to do with your voucher. In case of voucher, the person who is giving the voucher, he has committed that you'll enjoy that benefit. That's called voucher. Loyalty points, it gets benefited. You want to enjoy, you'll enjoy. If you don't enjoy, this may get lapsed. This is your loyalty points. Beneficiary, bearer of the cash or account holder in case of money. In case of voucher, bearer or account holder. Either the account holder or bearer. If I get a voucher, I can use it myself, or I can transfer to my friend, or I can give it to my family members. In case of a loyalty, it is only to the account holder. Nothing will happen. It sits in the account. Represents cash deposited. In case of a money, it is a money. It's a cash deposited. It is as good as a physical money available in bank or available with you. In case of voucher, it is not my money. It is paid by the issuer, the person who is issuing. In case of a company, I'm saying, if company is giving a voucher, company has already paid 50 lakhs to the jewelry shop fellow, or paid that 50 lakhs to the bookshop person. So the third person has already paid for that. In case of a loyalty points, it is notional credit. There is no money. I spend money, I get a point. It's just a loyalty point. Now, paid value is nothing but whatever, in case of money, I swipe the card, what money is there, that gets paid. In case of a voucher, if I want to buy worth 10,000, I discount. Like I use the voucher, whatever value is there in the voucher gets discounted, and the balance I'll pay. In case of a loyalty points, it is not having any paid value. It is on the basis of accrual, multiplying with a factor, you get some equivalent points. Now, is it paid value refundable? In case of money, yes, it is refundable. In case of voucher, it is just paid. There is no refund possible. In case of loyalty points, this question of payment does not get erased. Transferable money, no. Voucher, it can be transferred. Loyalty points, again, you have a right to encash. Issuer is redeemer. In case of money, yes. In case of voucher, no. Now, something which is important is redemption. Redemption of money, a bearer can redeem. Voucher, a bearer can redeem. Loyalty points, only an account holder has to redeem. Now we will see a couple of examples to understand what is an voucher and what is not an voucher. I have also given what is the reason why it is not to be called as a voucher. First example, there is a shopping card, gift card, which is purchased for rupees 5,000. Now these days we have this Amazon. After the lockdown pandemic has come in, most of the occasions we are just giving this Amazon gift voucher, which is loaded with a value. What do I do with that? I use that for the value which was loaded. I can buy a TV, I can buy a car, I can buy any of electrical gadgets for my requirement. So this shopping gift card, it is not voucher. Coupons are token given to customer at a pizza outlet on making a purchase of 1,000, which allows 10% discount on the next purchase. I buy some item, they give me a 10% discount on the next visit. It is not an voucher, it is just a future discount. So it is not a voucher. Money deposited in a digital wallet. I have, say, there is a bookshop. We have one bookshop called Sapna Book House. We give this give a card to our staff. Our employees, whoever goes to the bookshop, they can buy whatever book they want. And as every month there is a 500 rupees which gets credited into that particular digital wallet. This is again as good as money, not a voucher. Transfer of liability towards accumulated loyalty points credited to customer. Now, this is something where there's a loyalty points which gets confirmed and that gets into a physical cash form and they give. Like if you see offers from most of these credit card agencies, etc. The moment you spend some money, they say, look, I'll give you an voucher which is having a value of say 500, which is encashable at this movie plaza or some other area. That is called voucher, where credit card authority agencies have committed that, look, this voucher has got a value of 500, has 1,000. That can be redeemed at this particular shop only for this purpose. Then yes, that is called voucher. Prepaid instruments, all your DTH recharge or multi-currency traveler's card recharge, all this is money and not a voucher at all. So this is one example which you need to keep in mind to define something called as a voucher. Now, we will just take an example for section 12 in relation to my determination of time of supply. First case, invoice was raised prior to removal. If you look into the headings, I have mentioned invoice date, invoice due date. Invoice date, when I have issued an invoice. Invoice due date, as per section 31, what is the point in time when I have to, as per section 31, the point in time when we need to raise a tax invoice. Next column, payment entry in the books, credit in the bank account, and determination of time of supply. By virtue of section 60, notification 66 of 2017, your fourth and fifth column is redundant. However, let us understand from examination point of view. I have raised the invoice on 10th October. My due date to raise invoice is on 20th October. As per section 31, I am supposed to raise the invoice on 20th October. But I have raised the invoice on 10th October. My payment entry to the supplier is on 26th October. Credit in the bank account. As per the bank account, 30th October, payment went to the supplier. My time of supply, section 12 subsection 2, section 12 subsection 3. All that will be, in case of RCM, receipt of goods is required. So this is from 12 subsection 2 point of view. Earlier of date of invoice or this. So time of supply will be invoice date. When I refer to my section 12 subsection 2, invoice date, provided if it raised within provisions as per section 31. I have raised on 10th October much prior to the due date of 20th October. By virtue of that, 10th October becomes my time of supply. Advance received. Advance has been received. Now, though we have read that notification 66, still let us understand. For the advance which I have received, I have raised invoice on 30th October. My due date for raising an invoice is on 20th October. 10th October, I have received the money. Money got credited in the bank account on 30th October. Some accountant is not good and not a prudent accountant, not a studious. When check was received on 10th October, till 30th it is not credited. Now coming back to this example, 10th October, like 12/2, tax invoice or payment, whichever is earlier. Because of virtue of 66, my this payment was withdrawn. So virtually I'll be left with my tax invoice. My due date is 20th October, but I have raised on 30th October. So what it says, time of supply shall be 20th October. Look, you're supposed to raise on 20th October, but you have raised on 30th October. Your time of supply, that is liability to pay the tax, gets crystallized on 20th October. Now this example, slightly if I alter, instead of 30th October, if I put the date as 31st December, if I put the date as 31st December, now this is the area where the departmental audit, assessment, scrutiny, the issues comes into picture, where they'll say, look, your removal happened on 20th October. You raise the invoice on 31st December. Why shouldn't I levy the tax on 20th October? Your time of supply is on 20th October. Interest from 20th October till 31st December. This period, as per section 50, cannot be recovered from you. This is one point. This is one point which could be argued from the department point of view. Next, invoice raised prior to removal. On 30th November, I have raised the invoice. 20th November is my due date to raise invoice. 20th November is my due date to raise, but I have raised the invoice on 30th November. My payment received on 16th November and bank account was updated on 30th November. Time of supply earlier of these two, that is due date is 20th. Because I have violated to raise an invoice within the due date, my time of supply shall be 20th November. 20th November. So this is one example. This is one slide. This is one slide which is going to explain you how we determine as per section 12 subsection 2 when is my time of supply. Raising of tax invoice alone is not sufficient. Raising of a tax invoice as per section 31 is also very important. So when I have mentioned due date, the due date is as per provisions under section 31. I'll just see quickly couple of queries raised, if any. One question has come, Pradeep Kumar. When a unregistered dealer supply material, where we need to raise RCM basis, whether we need to raise RCM basis. Okay, probably you're asking for a self-tax invoice. Yes, Pradeep. Section 31, subsection 3. Section 31, subsection 3, which talks about issuance of a self-tax invoice. Yes, we need to raise a self-tax invoice when we buy from a unregistered dealer. When we come to the books of accounts, and when we deal with the relevant compliances, we'll have detailed clarity on that particular aspect. So what I recommend, like now we are moving on to section 13, which deals with your time of supply for services. So any of you have any doubts till now wherever we have discussed? What I request is put back your question to your chat box. I'll clarify that particular doubt and I'll come back to the provisions once again. Okay, 7:42. Probably I would continue at this moment. I don't want to take a break. If required, I'll take a break at a later stage. Next, we move on to section 13. Section 13, which deals with your time of supply for services. Practically, once you get into the, once you qualify and get into the corporate world, this one provision, section 13, which deals with your time of supply for services, is one of the provision widely debated, argued upon, litigation, everything rests with this particular section called section 13. Wide focus is there for the simple reason, central excise, very well settled law, VAT law dealing with goods, also very settled law, service tax. This service tax alone has got litigation 3 times the litigation which is there under central excise. This service tax alone has got a litigation which is almost 5 times the litigation under VAT laws. So if you see VAT laws and excise, which is dealing with the goods, absolutely not much litigation. At best the litigation is, one is with respect to value of the goods. That is, you have applied rate of tax 14%, say 5% instead of 14%, or 12% instead of 16%, or input tax credit. But for this, there is no litigation on your goods. Services, sky is the limit. So let us understand carefully word by word what is there in section 13, how this litigation comes up when we don't understand, when the officer is having a difference of opinion from your bookkeeping. To start with, section 13 subsection 2 says that my time of supply shall be earlier of the following, like they have given choice. Point number A, date of issue of invoice by the supplier. As we have read in section 12, look, If you have issued an invoice, that I'll take as your time of supply. Again, it doesn't stop there, comma. If the invoice is issued within the period prescribed under section 31 subsection 2, you have issued an invoice, I admit. Now, if you have issued the invoice within the period prescribed under section 31 subsection 2, then I say I'll go with your tax invoice or the date of receipt of payment, whichever is earlier. Now look at this. When we look into section 12, my issuance of invoice, my payment, both are separate. But here in section 13, advance and my invoice were brought under one particular provision itself, point A itself. So here they say, look, if you have issued invoice, I'll go with your invoice. This invoice, what they say, is issued within a period under 31.2. What is that period? We will understand little later. So where you have issued invoice, then that, or date of receipt of payment, whichever is earlier. So if you have received payment on say 5th June, and you have issued an invoice on 5th July, June I have received the payment, July I have issued an invoice. The law says that earlier of these two, since payment is received earlier, my date of payment, my receipt of payment is my time of supply. So my liability to pay tax gets crystallized on this particular time of supply. I have taken, if you refer to the working notes, one example in relation to services covering section 13 subsection 3 subsection 2. One example I have covered in detail. A very good example to practice for must, because of the permutations and combinations which exist under the business. Also, when you look into this point A, it is referring to my payment. Again, as a professional, once you get into the corporate world, when you summarize the data, your challenge lies with this particular point A. I'll give an example at this moment to understand. I have received 1 lakh rupees as advance. Assuming in that month I have not issued a tax invoice. As per 13A, the moment I receive money in advance, my time of supply gets crystallized. So 1 lakh I have received in the month of June. I have to pay tax on that 1 lakh. Now, June, no transaction, I paid advance. I go to July. In the month of July, I raised 2 invoices. One invoice for 20,000, another invoice for 30,000. I repeat, in July, I have raised 2 invoices. One for 20,000, another for 30,000. Total 50,000. Now, question here. As a professional, look, June I have paid on 1 lakh. July I have 50,000. July I have invoice for 50,000. Can I knock off these two? And say, I have further 50,000 advance. Should I need to pay tax to the government? Now, this is a question which comes in as a practical scenario in your time of supply. More sought around, more complicated with bookkeeping and accounting. A chartered accountant in practice has got a much important role to play, designing the accounting system, the scheme of chart of accounts, the mechanism, how do I link the GL accounts, ledgers, to track what is an advance, to track what is an invoice, how to correlate these two and see what is a net tax payable. Next, not only this, documentation. Now when we are talking about this advance was received from Mr. C. Bill was raised on A and B. I repeat, 1 lakh was received from Mr. C. Bill was raised on A and B. A and B are different customers. C is a different customer. When I sit in the month of July, can I net off this bills raised on A and B with C? Answer is big no. So there is a correlation of 1 to 1. When I have received money from C, only when I raise an invoice on C, I can knock off with that particular advance, and the balance I have to pay tax to government. With that backdrop, we come to this particular time of supply. Point number A. Next. Date of provision of service if the invoice is not issued under section 31 subsection 2, or date of receipt of payment, whichever is earlier. Now here what they're saying, in case I have not issued my invoice. Why? I have to issue an invoice, I have not issued. So in case if I have not issued the invoice, date of provision of service if the invoice is not issued within the time prescribed, or date of receipt of payment, whichever is earlier. Now, tricky thing, date of provision of service. Now, goods, tangible movement of goods, I can identify. In relation to services, which is intangible, how can you say when is my provision of service? I'll give a simple example for most of you to correlate. Most of you have finished your internship or in the process of completing your internship. Take an example. Say there is a company who have appointed you or the principal as a auditor. Your principal does the statutory audit, there's also income tax audit, there's also your ROC filing. There was a consolidated fee 1,50,000 per audit, taxation and ROC. Audit completed on 31st August, signing happened on 31st August. Income tax filing done on 30th September. ROC filing done on 30th November. Now question comes here, time of supply for that 1,50,000, should I raise the bill on 31st August? Should I raise the bill on 30th September? Should I raise the bill on 31st October? What should be my time of supply? Provision of service they are saying. Now 1,50,000, breaking up that for statutory audit, tax audit, ROC filing. This is something again, a documentary explanation which is also important at the time of your departmental assessment scrutiny. So coming from this section 13, this is just an example to explain how the offices can correlate, how the department offices can review your transactions in question. Is it a transaction which is complied under section 13 for determining what is my time of supply for rendering services? Reason, point number B, it talks about provision of service. Now, a big question. GST law has not defined what is your provision of service. Now, when there is no definition, what we need to do, we will fall back to General Clause Act. When you read your law paper, there is something called General Clause Act. As per General Clause Act, was there a definition which was referred to? In case there is no definition referred to, you will fall back to the General Oxford Dictionary to understand what do you mean by this particular thing. We will come back to our accounting provisions which deals with your provision of service. Accounting Standard 9, revenue recognition, provision of service. We will fall back to our bookkeeping saying that when do I recognize my revenue? Relevance of my provision of service, that when this money has come, when I have rendered the service. Now, this time of supply, what we are referring to, Rule 47, Section 31, Subsection 2, refer to Rule 47. Rule 47. Combined reading, Section 31, Subsection 2, Rule 47. Combined reading of these two rules, it says that only in case of a service. It says that invoice referred in Rule 46 has to be issued within a period of 30 days in case of a taxable supply of service. So, in relation to services, I have 30 days to raise my tax invoice. I'll give a practical example at this moment to understand. Most of these software companies, we call that as there's a technical term we use called body shop business. What is this body shop business? This is nothing but manpower deployment business. Software company, say XYZ, software company, say PQR Limited. These are two big software companies. They have to they have to support GST and they have to support ROC, they have to support your income tax portal. They hire people from the open market. So there is a small company called HUL Limited. This one small company, they do manpower deployment here, manpower deployment there. Now, whenever I do the manpower deployment, usually the billing is from beginning of the month till end of the month. There is a timesheet. Whenever the employee has been deployed on a client place, the employee's work has to be approved by the client. Only when the month gets over, I get the timesheet approved. Once the timesheet is approved, I get an internal mail communication that for this gentleman, Mr. X, for 28 days years work, you can raise a bill. So once I get an approval, I raise a bill. There are a couple of procedures and formalities to get those approvals. So once the month gets over, it is not possible that 30th I can raise a bill on 30th. I'll raise on 5th, 10th, 15th, 20th because of various approvals and formalities. That is the reason you have 30 days gap from the date to issue a tax invoice. So when I raise a tax invoice, they say issued within 30 days in case of a taxable supply of service. From the date of rendering of service, within 30 days, I have to raise a tax invoice. When you come back to the goods, there was no grace period. On or before removal, I have to raise a tax invoice. Where in relation to goods, in relation to services, they're saying that 30 days. So if I don't raise the invoice within 30 days, I'll go back. What it says, if I go to the previous slide, if I have not issued the invoice as per Rule 47, Clause B, provision of service, the date of provision of service, 30th April, I'm supposed to raise a bill. 30 days from there, 30th May. Instead of raising a bill on 30th May, if I've raised on 31st May, the time of supply says, look, as per Rule 47, I have given grace period of 30 days. You have not raised a bill on 30 days. I'll come back to my Clause B. 30th April, your provision of service is over. Your liability to pay taxes on 30th April. Now what happens? Sir, I have raised a bill on 31st May. I have considered that bill for returns in the month of May. I also paid GST for May. Department officer comes and says, Baba, this bill, what you have raised on 31st May, your time of supply, your provision of service is on 30th April. From 30th April, within 30 days, you are supposed to raise a bill. You have not raised a bill. You have crossed beyond Rule 47. So, your time of supply is 30th April. Pay me interest from 1st May till 30th May or 31st May. Pay me your interest. That is what under Section 50 going to take place. Any of you have any doubts? I'll take up your queries here. There is one question from Sri Raksha. What will be the time of supply in case of export of goods or services? Simple. When we are dealing with Section 12, it just talks about goods. When we are dealing with Section 13, it just talks about services. Sri Raksha, again, I repeat my point here. Domestic sale, export sale, sales to SSZ, absolutely there is no bifurcation. Time of supply, what they say, your time of supply gets crystallized on or before removal. On removal, I'm removing goods on 30th April, meant for export. My export may happen on 30th June, absolutely not to worry. My liability to pay tax has been crystallized on 30th April. Export of goods. Again, services. As I say, provision of service. Your service was completed on 30th. You are supposed to raise a bill on 30 days from 30th April. If you are not raised within 30 days from provision of service, you are non-complying with your Section 13. So, hope I have clarified your point, Sri Raksha. Next, Mahendra, there is one question. What type of goods notified by council for time to issue tax invoice? Okay. Mahendra, you're asking a question in relation to unregistered dealer purchases, that is Section 9, subsection 3, Section 9, subsection 4. There are two notifications given which is covered under levy, which deals with your notified goods, notified services. You can just look on to your notifications list, notified list of goods under 9.3, notified list of services under 9.4. IGST and CGST, there are list which is given. You will get an answer for that in that particular list, Mahendra. So as of now, these are the questions which are available. Apart from that, there are no other queries till now what we have discussed. So I'll come back to our presentation to discuss further. So Section 13, which deals with our services. Hope you have got the seriousness that it should be raised. It should be raised within a period of 30 days from the date of provision of service. So the crux here, entire discussion is provision of service. As an SSC, I have to prove the owners for this provision of service. Now, we have understood that there is a period of 30 days. There is a further provision in Rule 47. It says that in case of insurer, banking company, financial institution, NBFC, insurance company, banking company, financial institution, NBFC, the period within which invoice or document in lieu thereof shall be issued is 45 days from the date of service. Normal course of business, 30 days. Normal course of business, 30 days. Only for these four category, 45 days is the time provision for issuance of tax invoice. Examination, probably you can expect a question. Mr. A has paid a sum of rupees 15,000 to get a policy renewed from XYZ insurance company. 30th April payment has been made. Tax invoice was raised on probably 5th of June. Examine the compliance with time of supply provisions. Now, as per time of supply, if you're an insurance company, I have 45 days. So when I have received money on 30th April, entire May 31 days plus a grace period of 15 days, that is till 14th of June or 15th of June, I have a time limit to raise a tax invoice. If I've raised the invoice on 5th June, yes, I have raised within the provisions as per Rule 47. When I've raised invoice within Rule 47 time limit, then I have complied with the law under Section 31 subsection 2. Instead of issuing invoice on 5th June because of say pandemic and all, I have raised the invoice on 1st July. Money was received on 30th April. Tax invoice was issued on 1st July. Then you will say the time limit as per Rule 47 is 45 days, which gets over on say 15th of June. Since you have raised the invoice on 1st July, there is a non-compliance, and by virtue of section Rule 47, read with section 13, the time of supply falls back to provision of service. The provision of service is when you have received that money, that shall be your time of supply. Next is your time of supply for services. Time of supply for services, where it's a residential residual entry where it says similar to goods, where a taxable supplier has received a money, receives an amount up to 1,000 rupees in excess of the amount indicated in the tax invoice. Similar to the goods, I have billed for 50,000 for the service, I have received 51,000, 52,000. So to the extent the surplus money over and above the invoice value, up to a sum of rupees 1,000, only 1,000, in excess of the amount indicated in the tax invoice, the time of supply shall be to the extent of that amount, excess amount, shall be at the option of the supplier on the date of issuing invoice. Whenever I raise an invoice, that particular date will be my time of supply to the extent of such excess amount. Now, if I have received 2,000, can I have a choice that up to 1,000, when I raise a tax invoice, that shall be the time of supply. The balance 1,000 shall be the date of invoice. For ease of understanding, I have billed for 50,000. 30th April, I have billed for 50,000. 5th May, I have received 53,000. Now 3,000 I have received excess. Now read the provision. Where the supplier of a taxable service receives an amount up to 1,000 rupees in excess of amount indicated. Now they say receives an amount up to 1,000. The 3,000 is not up to one amount. It is beyond that up to 1,000. So this provision shall not be applicable. That entire 3,000, the time of supply shall be the date of receipt. Similarly, as we have discussed under section 12, deeming fiction. Why was this deeming fiction brought in? For those money which was received in advance, to fix the owners to pay tax on that advances, my explanation was inserted in this particular law. Again, a clarity was given. How do we interpret this time of supply for payment? Like when did I receive that money? Next. Similar to continuous supply of goods, like what we have discussed in relation to goods, oxygen cylinder or drinking water, etc. In services also, we have something called continuous supply of services. When you look into this definition, it says continuous supply of services means a supply of services which is provided or agreed to be provided continuously. Underline the term continuously. Means under a contract, I am supplying continuously. There is no break. Or on a recurring basis under a contract for a period exceeding 3 months. That supply is exceeding 3 months. In relation to supply of continuous supply of goods, this term time period has not been set. It just says that recurring basis, continuous basis, you are supplying the goods. In case of services, they say if you are supplying your services under a contract which is having a period more than 3 months, then it can be called as a continuous supply of service. It can be called as a continuous supply of service. In this scenario, the law says that how do we determine time of supply? Where the due date of payment is ascertainable from the contract. In the contract, the due date for making the payment, when it is a continuous supply of contract, then that shall be the date which is your time of supply. Example. So there is a AMC contract or there is a construction contract. Now AMC contract generally for a period of 1 year, which is more than 3 months. So yes, it is fitting into my continuous supply of service. Construction, again, construction activity of a building, it is more than 1 year. Again, it is fitting into this definition. Where my contract has a reference to payment. As per the contract, every 3 months after your visit, I make a payment. Now there is an event called due date of payment. Every 3 months, there is a payment to be made. So by default, every quarter I make a payment, then that is called as your triggering point or time of supply. The due date for payment as per your contract, the due date for payment, look at the language. It is not date of receipt. The due date of payment. If by chance, if you don't get money on or before due date, I'm still liable to pay tax to the government. Unfortunately, they are not saying that on collection basis. So if you have a continuous supply of service, as per your contract, there is a recurring nature. The due date which is set in your contract, that due date shall be your time of supply. The invoice will be issued on or before due date of payment. If I don't receive money, still, now I'll correlate this example with my rental contract. My due date for payment is 30th of every month. If I don't receive money on 30th, I'm duty bound to pay tax to the government authorities. I cannot say my landlord, my tenant has not doing well. He cannot afford to pay that money for 2 months. He has paid my April and May. Instead of paying on April and May, he has paid on July. So I, being a landlord, I'll also pay my tax on that particular month in the month of July. Sorry, that option is not there. So my example of rental agreement, my due date of payment is ascertainable from the contract. From the lease contract, you say every month 30th you make a payment. So there is a contract which is having a continuity for more than 3 months and fix the date of payment, due date of payment. So that shall be my time of supply. I being a supplier, if I have defaulted in making a payment, then the law says that time of supply is linked with your date of payment, due date, and not linked with your actual collection. This is your point number 1. Point number 2. Now it says, this particular thing says, for a period of exceeding 3 months, where the due date of payment is not ascertainable. As per your contract, the due date is not ascertainable. Then the invoice shall be issued before or at the time when supplier of services receives the payment. Look, as per your contract, you are not fixed something called due date. Then what I will do, on or at the time, on or before or at the time when I receive money from my particular customer in relation to that supply, I fix that as a time of supply. This clause B is something which is generally not applicable. Now, what is important for us as a professional to look into the contracts, or when we vet the contracts? Now, especially in service sector, we need to design our revenue recognition. We need to design our mechanism to issue invoice. We need to design the mechanism of cash flows and also compliance with the tax laws. The service industry, you may feel that it is a little easier compared to the manufacturing. I would say both has got its own risk and rewards. Manufacturing industry has got a wider exposure in terms of costing, in terms of legal labor laws, in terms of your tax compliances. In case of service sector, fortunately, that legal obligation laws are little enough, but in revenue recognition, bookkeeping, tax compliances are umpty number wide open for debate. So this is your clause B. Finally, clause C, where the payment is linked to completion of an event. Look, there is a point one, clause A, due date. Clause B, due date is not there, just a payment is due. Clause C says the payments are linked to completion of event. Then invoice to be issued on or before completion of the event. My invoice has to be issued on or before completion of an event. I'll come to one practical example at this point. Say you're heading a company as a CFO. That company is into AMC service. As per the contract of AMC, I say every quarter, once in 3 months, my engineer visits the customer premises, does the inspection, and on the basis of basic inspection, I raise a tax invoice. Now, question comes here is very important is the way the payment is linked to completion of an event. My engineer visits, say, first quarter, April, May, June. I have visited on May. I have not visited on June. Now, can I afford to raise bill on 30th June instead of raising on May? Because there is a completion of an event. As per the contract, I have to visit once in a quarter. That visit, beginning of the quarter, mid of the quarter, end of the quarter. Now, we need to carefully understand and read the language which was used in the law. Here they say the payment is linked to completion of event. So as per the contract, whichever is the event, payment is linked to completion of event. Now, once the event is completed, irrespective of whether or not money is received, my time of supply shall be invoice to be issued on or before completion of the event. Now, before you can issue or on completion you can issue. Again, the point comes in relevant here is documentation. How do you establish that this event was commenced? This event has been completed. This is something which we need to establish as per a documentation. Now, this till now, section 13, subsection 2, which deals with your regular service, deals with your continuous supply of services. Now we move on to section 13, subsection 3, which deals with your reverse charge mechanism. Again, this is one provision which is a nightmare for many of the businessmen to comply. Reason, bookkeeping. Second reason, having a clarity what services there is a applicability of reverse charge. Students who have attended the class on levy probably would have read that. People have missed the clause on levy. I would say section 9, subsection 3, subsection 9, subsection 4. These are the two sections which deals with your reverse charge mechanism. The list of services, the list of goods where RCM is applicable, have that list in handy. First thing. Second, maintaining the accounting transactions. I'll just give an example. Say GTA, that is freight charges. There is applicability of GST on reverse charge on freight charges. Now we know that there is an element called freight on which RCM is applicable. Assuming I have 100, take a simple example. I'll not name the client. There is one battery manufacturing company. This battery manufacturing company, which is having a spread all over India. This battery manufacturing company has got 300 vendors who are into transportation business. Every nook and corner of India, your battery needs to be delivered. This vendors are available to do the supply. Out of 300 vendors, 100 vendors are registered under GST. 200 vendors are not registered under GST. I repeat, out of 300, 100 vendors registered under GST. 200 vendors not registered under GST. For the reason, compliance is a burden, these people have not registered. This is organized sector. They want to enjoy probably a good tax, good food, stronghold on the business. They are big giants. They are registered under GST. Now, when I get bill from this set of suppliers, already GST is charged from them. When I get a bill from this set of suppliers, unregistered, no GST is applicable. What becomes relevant here is, where do I account these bills? This is a freight charge. This is a freight charge. Freight inward, freight outward. Freight inward, freight outward. Now I need to keep separate GL accounts, freight inward with GST, freight inward without GST, freight outward with GST, freight outward without GST. And then once I have the set of GLs, this provision, time of supply, how do I identify when should I pay the tax on that? Answer for that. First point, it says date of payment as entered in the books of accounts or date on which the account is debited from the bank account. So they say in relation to this freight RCM, wherever you have identified, the day when you make the payment to them, that shall be your time of supply. That shall be your time of supply. Or date immediately following 60 days from the date of issue of invoice. Date immediately following 60 days from the date of issue of invoice or any other document by whatever name called. In case of goods, receipt of goods, that is one element which is missing in services. So here what becomes relevant is here, when I have accounted freight charges, my time of supply shall be the day when I made the payment to this gentleman, or 60 days from the date of issuance of invoice. My bill was issued on 30th June. From 30th June, 60 days, 30th July, then 29th of August. So 60 days gets over on say 29th August. 30th August is my time of supply. Assuming if I have not made the payment till 31st August. If I have not paid till 31st August, payment is eliminated 60 days from the document date. 60 days from the document date. Keeping a track for this RCM is a big Herculean task for most of the corporates, especially the manufacturing sector. We have a very good role to play as a professional, as a chartered accountant. How do we design the chart of accounts? How do we fix the accounting heads? How do we define the vendors? The moment, like SAP environment, when we talk about the bookkeeping, when we talk about the controls in a system in the bookkeeping, we design an environment in such a way that this vendor is mapped to this GL. The moment I select the vendor, only these GLs will come. The balance GLs will not come. A supplier, who is a supplier, I'll get a GL which is of expensive nature. I cannot select an income GL for this particular vendor. If I need to raise an invoice on my supplier, there should be a system validation. There should be IT controls. So we will study something on ICAI where what is the system, what is the architecture, how does your DBMS functions, what are the controls, what are the discipline, how do we set internal system rules and regulations for a better system. All these are the things which we learn in our other papers. That knowledge is something which is relevant for us as a professional to set and frame the architecture of bookkeeping. So here, coming back to RCM, it says that one, look, you have made the payment entry in your books of accounts or debit in your bank account, whichever is earlier. That is your point number A. Point number B, assuming you have not made the payment, 60 days from the date of invoice. Now, this is a big issue. Accounting entry, when I am punching the bill says 31st May. While accounting, I have said 30th June. Oversight, accounting mistake or clerical mistake. All these sort of mistakes do happen. Now, the moment I say instead of 31st May, I am accounting the bill on 30th June, I have accounted as 30th June. 60 days gets counted from 30th June. But actually, from 31st May, 29th August, my 60 days period is getting over. So this is one big compliance which is there under reverse charge for services. Provided that way, it is not possible to determine A or B. Now, most of your department assessment, scrutiny or investigation, inquiry, this is one area where they'll say, give me the list of bills, give me your complaints with your time of supply. Section 13, your forward charge, your revenue, your expenses, where reverse charge is applicable, how you have complied with the time of supply. If you're not in a position to determine when you are paid or when you have the bill has been received, what they say, the date of entry in the books of accounts by the recipient, this battery manufacturer, when he has accounted, now he has accounted in his books of accounts. Question comes here, like our income tax TDS, making a payment entry or making a provision. Sir, what if I know that there is a consignment used from this supplier, I make a provision in the books of accounts. Can I call that? Answer is definitely a big yes. The moment I make a provision, now they say where it is not possible to determine time of supply under A or B because A is not there, B is not there. The officer will come and say, look, your date of payment not available. Your 60 days from the date of issuance of document, it is not available. where it is not possible to determine under A or B, the time of supply shall be date of entry in the books of accounts. I have recognized when I have punched a bulk provision, I made a provision of say 20 crores for that particular month. When I booked 20 crores, now 20 crores is quantified. The vendor A, B, C, like that, I have identified various vendors. This is the contract price. On that basis, I have bunched a provision entry. That is what they are trying to refer here and say, if the books of accounts of the recipient, the day I have punched my entry, that shall be your time of supply, especially in case of reverse charge mechanism. Finally, in case of associated enterprises, that is your entity which is controlling other entity, the entity which has control on other entity, where RCM is applicable. Section 13 subsection 3, which deals with your RCM. Import of service. This is one debatable issue which is there under service tax, even under GST law also. Whenever audit happens, this is one area which is picked up. So time of supply in relation to associated enterprises shall be date of entry in the books of accounts or date of payment. Two aspects. The day when I have booked the bill or the day when I have made the payment. What is the date of invoice has no relevance in relation to associated enterprises. Time of supply for services, vouchers. Now, similar to the goods, what we have discussed, if the voucher has got a specific date of its issue, that shall be my time of supply. If the date is not referred, then the redemption, when I redeem that voucher, that shall be my time of supply. Finally, fact in the ancillary provisions, again, as we have discussed in section 12, my invoice is not issued, not possible to determine, provisional service is not possible, reverse charge is not possible, continuous supply of service is not possible. Then they say when you are filing your periodical return or when you made the payment of tax, that shall be your time of supply. This is one important provision I probably have overlooked in my section 12, where it says in relation to addition in value of supply by way of interest, late fee, penalty for delayed payment. Now, both in section 12 and section 13, section 12, section 13, it says, whenever you're not getting the money in time, whenever you're not getting your money in time, I have a mechanism to charge something called interest or late fee or penalty for what? For delay in payment. So if at all, if I recover some money, generally if you look at your tax invoice, goods supplied here and above shall be subjected to interest, simple interest at the rate of 24% if the payment is not made within a period of 30 days. So you give a credit period and you also mention a clause. If you don't pay, I'll charge something called interest for penal action. Loss is that even that penal action, what you have taken, the money which you have recovered from your customer shall be subjected to GST. The time of supply for that penal interest shall be the date on which supplier receives that such money. So if I say 24%, just because 24% is there on the invoice, officer cannot demand me to pay the tax on that. The officer can demand on that particular 24% only when that interest of 24% is credited to my account. The day when I receive that penal interest, that is the day when I have to raise my liability to pay the tax gets crystallized. This is my time of supply for services. Now, if any doubts are there, section 12, section 13, we will just quickly look into that and then we'll come back. Good. So for no other questions are there, we'll come back to our discussion on section 14. Now, section 14, this is one important provision which deals with your change in rate of tax, tax in respect of supply of goods and supply of services. Every GST council, like coming from the professional background, whenever there is a budget, whenever there is a GST council meeting, there is an expectation from trade and other bodies, trade and other commerce bodies. They expect there should be a change in the rate of tax. There should be a reduction in rate of tax. There should be some alteration in the rate of tax. Either rate of tax can increase or rate of tax can reduce. So we will take one example to quickly understand what is therein for us as a professional to understand from section 14. I am talking about goods. My tax rate on 30th June is 12%. Goods sent on approval basis on for value of 2 lakhs on 15th June 2018. On 15th June, I have sent on approval basis. I have supplied goods on approval basis for a sum of rupees 2 lakhs. Now here, the movement of goods happened on 15th June for a value of 2 lakh. On 30th June, advance was received for rupees 2 lakhs. Now, what is relevant? The rate is 12%. 15th June, I have supplied the goods. 30th June, I have received advance for that particular material. There was no confirmation yet. Goods rate reduced from to 5% with effect from 1st July 2018. On 30th June, the rate of tax is 12%. Probably there is a GST council meeting, and the outcome of that, 1st July, the rate of 12% got reduced to 5%. Now, invoice was issued on 30th July. My rate of tax on the day when I have given to customer is 12%. On 30th July, I have raised a invoice. Now look carefully. Movement happened at 12%. Money received when the rate of tax is 12%. Invoice was raised when rate of tax is reduced to 5%. Now question comes here. Should the tax to be paid to the government is at 5% or at 12%? Now again, very, very important is assuming that your end customer is an individual who doesn't have a benefit of input tax credit. The tax is a burden. If you say the rate of tax is 12% and right now the rate of tax is 5%, 7% is a tax which is exposure to the individual. Now what will happen to the individual? Now definitely that fellow will negotiate saying that no, I don't want to buy from you, I'll return back the goods and I'll buy from elsewhere. Now if I sell to the same fellow, don't have a choice, probably at 12%. We will see under section 14. The same example slightly altered with other permutations and combinations. The tax rate is on 12%. Goods sent on approval basis on 15th June. Payment was received for 2 lakhs. Payment was received for 2 lakhs on 5th July. Now, instead of receiving on 30th June, I have received on 5th July. Movement of goods happened on 15th June. Payment was received on 5th July. Goods rate was increased. In this case, my goods rate was increased from 12% to 18% from 1st July. My invoice was issued on 30th June. Now look at the beauty. I have sent the goods old rate. I have received money under new rate. I have raised invoice under old rate. Now what will happen? Can the department officer demand 18% or they will collect only 12%? This is what we need to understand from section 14. So section 14 deals with your change in rate of tax. When there are different transactions where there is a commencement of movement of goods, when there is a money involved in receipt of payment, when there is issuance of a tax invoice, when these are the three events, those three events are relevant. Those three events are relevant for us to determine what is the rate of tax. Okay. There was one question from Dilip. What about the 4 questions? Definitely, Dilip. Once I finish my section 14, we'll come back to our 4 examples and we'll decide the answer. We will take care of that also. Now, section 14. Meanwhile, I would request all of you who is listening to me, whatever questions you have, keep posting on your chat box, your window, so that another 10 to 15 minutes we'll cover up this section 14. We'll come back to our examples, what we have discussed in the beginning of the session. Those examples will have a clarity, and also any doubts you have till now, we will cover up that also. Now, simple terms, section 14, take it this way. There are three events. Supply of goods or services. So there is clause A, supply of goods or services. Find out the date when that supply happened, the goods or services. Then there is a second event called payment. There is a third event called invoice. These are the three events which is going to determine, which is going to clarify what should be my rate of tax to be applied for the examples which we have discussed. So clause A, this is one section 14 clause A, which talks about in case of goods or services or both supplied before change in the rate of tax. Say 1st July in the example what we have taken. If this is a provision which says my goods or services supplied prior to change in the rate of tax. When I use the term supply, there is a supply which already took place. So my goods or services which are supplied prior to change in the rate of tax. Example 1st July is the rate of tax. If supply happened prior to, that is on or before 30th June, then what it says? I look into the other two aspects called, one is invoice, second is your payment. Based on three factors: supply, invoice, payment. So scenario 1, my invoice was issued after change in the rate of tax, but and payment was also received after change in the rate of tax. So here my time of supply is nothing but the date of receipt of payment or issuance of invoice, whichever is earlier. Now because both the events, out of three, two events out of three, my two events are happening after the change in the rate of tax, my rate of tax applicable is either date of invoice or payment, whichever is earlier. That is, anyway it happened after the change in rate, my new rate of tax will be applied. That is what scenario 1 says. Scenario 2. In scenario 2, my supply happened prior to 1st July. Invoice was also issued prior to July. Payment was received after. Then time of supply shall be date of issue of invoice. That is old rate. Whenever because out of three events, two events happen prior to change in the rate of tax. Weightage goes to prior to. Then they say date of invoice shall be your time of supply. Invoice was issued after the change in rate of tax. Payment was received prior to change in the rate of tax. In this aspect, in this scenario, supply happened prior to 1st July. Payment was received prior to 1st July. Billing, my invoice was issued, a loan was issued after July. Time of supply shall be date of receipt of payment. Because two out of three events happened prior before, then my time of supply shall be prior. That is old rate, that is date of receipt of payment. So simple terms, examination for you to remember. Take three events. Those three events, identify the date of supply, identify the date of invoice, identify the date of payment. Out of these three, whichever two has a period after or before, that is the point determining when is your time of supply. So this is one table in relation to before. Next, point number B. In relation to goods or services which have been supplied after change in rate of tax. Now this is one provision which says my goods or services which are supplied after change in the rate of tax. Then scenario 1, invoice was issued prior to change in the rate of tax, payment was received after. Out of three, two are happening after. So my time of supply is linked with my payment. Scenario number 2, my invoice was issued prior. My payment was also prior. Out of three events, two events are prior. So earlier of invoice or payment, that is old rate. Scenario 3, my invoice was after, my payment was before. Out of three events, supply happened after, my invoice also happened after. That is, then new rate will be coming. That is, my time of supply shall be date of invoice. So this is one provision which deals with your change in rate of tax, where three events are linked for identifying your rate of tax. Now, quickly, these two slides are kept in time of supply perspective. What are the general issues we will come across when we apply this theory of time of supply? Also, when we have practical issues, when we look into the practical corporate world, what are the common general issues are there which are revolving around your time of supply? That is what we are going to discuss in this particular slide. Common errors. First is your tax invoice prepared, goods are not dispatched as at the month end. This is one practical issue which will happen. Coordination, interdepartmental coordination. Again, auditing, internal controls is one aspect which you deal with. Tax invoice was prepared on 30th April. Physical delivery happened on 5th of May. The client is within the city. It take it takes 1 day for making a delivery to the customer. 30th April, I have prepared the tax invoice. 5th May, the delivery happened. Why is it so? Second, like though invoice was prepared on 30th April, 2nd May, I have kept the goods ready for dispatch. Like packing happened only on 2nd May. 3rd May, I have called for the transporter. 4th May, transporter picked the material. 5th May, delivery happened to the transporter. Accounts department, I raised a tax invoice. Should I pay the tax? No, the commercial department says, no, I have not dispatched the goods. So kindly cancel the tax invoice, raise the invoice and pay the taxes in the month of May. Again, time of supply. Once you prepare a tax invoice, if you recollect our example, there is a date of invoice and due date for invoice. Now, when you compare these two, though due date is on 4th May, I prepared invoice on 30th April. By virtue of section 12, tax invoice is the date for time of supply. So invariably, April will be the month where my time of supply has been triggered. I have to pay the tax. Assuming I have paid tax in the month of May, assessment time, they will say there was a delay of 1 month for payment of tax. Pay interest under section 50 for that particular delay of tax. Contracts with composite supply. This is one perennial issue which is there in the industry. When I say composite supply, there is one section called section 8 which talks about your composite supply and mixed supply. Quite interesting section. Read through this section 8 which deals with your composite supply and mixed supply. So if there is a contract where there is a composite supply, determination of time of supply which is in relation to goods or services. I'll give an example. So there is a company which is into manufacturing of DG set. This DG set which is manufactured, I have a customer who wants to buy the DG set. I have a customer who wants to get the installation done for that DG set. Assuming there is a contract from a customer to supply a DG set, also to do an installation activity. So there are two events which are required. One is supply, second is installation activity. Now, if I look from customer perspective, he wants the DG set to be installed. If I look from the government perspective, look, there is a supply of DG set, there is also service. So like in relation to goods, on advances, no taxes payable. In relation to services, even on advances, there is a triggering of tax. Now, how do we identify? Is it a mixed supply? Is it a composite supply? If it is a composite supply, the money which is coming in, when I get the money, should I appropriate for goods or should I appropriate for services? Generally, when you look into your industry, like again, once you get into the corporate world, you look from the finance point of view, negotiation for advance payments. Why should I pay advance to my supplier? Now, this is a big contract which is having a value of 10 lakhs. I pay a token advance of 20% because they have to procure raw material. They have to procure some goods for the purpose of supply. Because there is a working capital which is required, I, being a buyer, I have to pay some amount to get the work done, to get the material supplied within the time which I have prescribed. So to encourage my supplier to honor his commitment, to encourage my customer in turn, there will be contractual obligation to pay advances. In relation to business, when we receive money, I have a composite supply. I receive money for manufacturing of DG set. But what is my expectation? To do the installation at a later stage. It is a composite supply for labor activity, for service activity. So when I receive money from the customer, should I call that money for goods? Should I call for money for services? That advance money. Again, this we need to look into our contract to clarify what is the expectation. Receipt of money in advance from a customer who places order for supply of installation. This we have discussed. Receipt of payment at head office, common bank account, delay in identification of branch where accounting is required. Now, we were talking about section 12, payment supply of goods, section 13, which talks about time of supply for services. What if there is a common bank account for all the branches, say Tamil Nadu, Haryana and Pune, Maharashtra. I have 3 places where my business is functioning. I'm into manpower supply. So there is common customers at 3 locations. When I receive money from my customer, at that moment, I don't know that money has come for like only one account is there. I have bank with State Bank of India. The moment money has come in, it says XYZ. XYZ is a customer at one location, 2, location 3. How do I identify that this money is in relation to this location? Identification of time of supply on collection basis. Section 13, subsection 2. issuance of a tax invoice or receipt of payment. Tax invoice not issued because I don't have a clarity from where that money has come. Now I have to pay on collection basis. Should I pay on location 1, location 2, location 3? This is one practical issue with one account where I don't have a clarity. Receipt of bulk payment against invoice and part against the supply, like a DG set what we have discussed. When I have a DG set also a labor, how do I issue a tax invoice? How do I bifurcate that particular payment to determine my time of supply? This is another issue we have. Finally, again, supply of goods which is part of interior decoration. Now, there are goods which are taxable at 28%. There are goods which are taxable at 18%. There is a service which is taxable at 18%. When I have supply of goods, when I have supply of services, then how do I determine what is my time of supply? What is the rate of tax? When we come to valuation, we will deal with this particular example. Section 142, as I have discussed in the beginning, Section 143 deals with job work. This is one example, which is one issue. Positive time, what I will do, I will come back to our examples to discuss in detail those 4 examples. Let me see what is the, yeah. Now, meanwhile, I'll quickly brush up with, okay. Hold on, I'll come back to the slides of our examples. Before we start with these examples, I would request you to put on your questions. Whatever questions you have, I'll give you a minute. If you can add all your questions for discussions on section 12, section 13, section 14, I'll quickly cover up those provisions and then we'll come back to these examples. I'll just give you a minute time. I'll wait for you to post back your questions. I'll give you a minute time. Okay. Couple of questions have come with respect to dealing with that example, how to deal with supply of goods. Yes, I'll discuss in detail. There's one more question in relation to sale. What we have discussed in relation to Steel Authority of India Limited. Again, I throw some light on this particular thing. Definitely, yes, I'll cover up. But for this, there are no questions. So I'll presume that whatever we have discussed till now are clear enough. I'll come back to my example and then we'll discuss this and then we'll go to that sale case also. First example, this example, goods were dispatched on 28th of March, F4 basis. Now, as we understand, section 7, supply. The moment we say the movement of goods occasioned on account of supply, I repeat, the movement of goods occasioned on account of supply and okay. I am talking about example number 1. My goods have occasioned movement on account of supply. Section 7 gets triggered, supply taken place. Then section 9, levy. Was there a levy? Answer is yes. When these two things are satisfied, section 7 supply is there, section 9 levy is there, then definitely yes, section 12, time of supply has to be determined for this particular thing. Now, determining of time of supply, issuance of a tax invoice issued as per section 31(1) or date of receipt of payment. Now, date of receipt of payment has no relevance. Reason section notification 66 has withdrawn that particular aspect. So the only left out is your tax invoice. Now, have I issued invoice on 28th March? Answer is yes. Then I am compliant in GST law. So answer to that particular question. If the goods were not accepted by customer, irrespective of whether customer accepted or not, on 28th March, I have issued a tax invoice. My time of supply gets triggered under section 12, subsection 2. There will not be any change. On the tax invoice, Mr. A has mentioned supply on approval basis. Now, when I have sent on approval basis, the moment I raise a tax invoice, now recollect your section 12, subsection 2, where we have given examples. My due date for tax invoice and the date of tax invoice. The moment I raise a tax invoice before the due date, it is deemed that section 31 tax invoice was issued. On my tax invoice, the moment I mentioned sale or approval basis, there is an interlinking with section 31 subsection 7. I repeat, section 31 subsection 7. If I have to send the material on sale or approval, don't raise a tax invoice. Send it on a delivery challan. The moment I have sent on sale and approval where tax invoice is issued, my responsibility is frozen. So for 28th March, my time of supply has been frozen and I have to pay tax. Can the goods occasion the moment without a tax invoice? Answer is yes. Where I make available the goods to the customer. Occasion its movement without a tax invoice, I can use a delivery challan. Instead of issuing a tax invoice, the alternative available here is I have to use a delivery challan. So, as a part of business, when we come into documentation, books of accounts and other provision, chapter 10, I believe, we will discuss in detail more in relation to the delivery challan. Example 2, with respect to the landlord service is what we are talking. So we have discussed in relation to services, my invoice has to be issued as per the section 31 subsection 2, that is 30 days from the date of completion of service. I have to raise a invoice, rule 47, or date of receipt of payment. In this example, I have not received a payment as per the contract, as per the agreement. If at all, I have to raise the invoice on 30th. My time of supply is 30th April. If I've raised within 30 days, yes, the officer will wait till 30th of May. For the month of April, 30th April is the due date for raising an invoice. For in service, there is a grace period of 30 days as per rule 47. So if I raise an invoice for the month of April on or before 30th of May, I am compliant with the law. If not, I am not compliant with the law. My provision, time of supply comes back to 30th April. So in this scenario, this time of supply gets crystallized as per the contract. Second, instead of commencing on 1st April, my service, the rental commenced on 20th April. Now here, by virtue of your contract, 2 lakhs will be on 2 lakhs time of supply gets crystallized. If you have a contract which has been amended where you say my service does not get started on 1st April, my leasing activity does not start on 1st April, rather it starts on 20th April. That balance 11 days alone, there will be a tax time of supply which will be determined upon. Now again, if this tenant vacates the premises without any notice, and if I don't terminate the contract, my contract runs for 11 months, balance 5 months, the officer has a right to determine the tax of supply for the purpose of levy of tax. Consideration. Now there is a term called consideration. Consideration is the money received or receivable. Now if I don't receive money, I am going to receive at a later stage. That is also equivalent to a consideration. In case of a compressor, the question asked is, does the supply occur on removal or even without removal? Now here, on say 1st April, I have removed from my factory. 15th of May in the trade exhibition, customer has expressed his interest to buy the material. Now question here, slide number 4. Supply under section 7 on 1st April, was there a supply under section 7? I don't have an interest. I don't have an intention. I don't even know PR Limited. My supply didn't even took place on 1st April. Only on 15th May, there was an expression of interest to buy. There was an acceptance to sell. When both the things are complied as per my contract act, read with my sale of goods act, I can execute it a sale transaction. 15th May, the expression of interest to convert that as a sale has been triggered. So if you refer to section 31, movement of goods on or before removal. Alternatively, when you make the goods available, then that is your time of supply. Acceptance happened on 15th May. My time of supply gets triggered on 15th May on that particular 50 lakhs. So where there is no movement, I'm not linking with the date of removal, I'm linking with the day when the acceptances come into picture. Then in relation to this trade exhibition which is there in Tamil Nadu, a person from Gujarat, I repeat, a person from Gujarat all the way has come to Tamil Nadu for participating in a trade exhibition. Now that participation in a trade exhibition has caused registration under section 22 called casual taxable person. I'm selling the goods in the state of Tamil Nadu. I'm registered in the state of Gujarat. When I come into the state of Tamil Nadu, and when I express my willingness to sell the goods, by virtue of section 22, I'm bound to take a registration. When we deal with registration, we'll have a clarity on this particular aspect. Then this example number 4 we have discussed, which is linked with your section 142, section 143. Section 142 deals with the ancillary transitional provisions. What it says, section 142 subsection 11. Section 142 subsection 11 deals with this particular case. If the goods are billed on or before 30th June, my erstwhile loss gets applied. If the money received was not billed on or before 30th June, if that was to be billed, if it was received and if the tax invoice is raised after 1st July, my GST loss will continue. Goods are supplied prior to 30th June, bill raised on 1st July, GST law. Goods are supplied prior to 30th June, tax invoice raised prior to 30th June, old loss will continue. Goods were supplied prior to 30th June, tax invoice raised on 1st July, payment was received on old period. Then, as per the old period, advance is not taxable, then GST law gets triggered. On advance, erstwhile VAT loss or service tax gets applicable, then GST shall not prevail. That is covered under section 142. This is covered under example number 4, which deals with my ancillary provisions. Quickly, I'll just see if there are any further questions to our discussion before we come on to our Steel Authority Limited case. Yeah, there was one question saying that can goods be sent on delivery challan interstate also? Now, there's no restriction, there is no barring. A delivery challan can be used for movement of goods, either within the state or outside the state also, because it is not intended for sale. I can use a delivery challan. Absolutely not an issue with that. Quickly, we'll come back to this. I'll do one thing. I'll take up one working notes which was published. I'll discuss a couple of questions for brevity. Then we'll come to the Steel Authority case. Yeah, this is one working notes which was shared, which was hosted on the website. So this is. Hope you can see the Word document. This questions, these are the questions which are set from the backdrop, which are set on the backdrop of time of supply. We will discuss these questions quickly. First question, this is set in the backdrop. Mrs. ABC Limited, a registered person in the state of Telangana, is into the business of tool manufacturing for OEM customer. 1st April, tools worth 4.5 lakh were sent on sale or approval basis to a customer with Mrs. Bikes Limited in Gujarat on receipt of advance for rupees 3 lakhs. So what happened? On 1st April, there was a money received on advance and they have sent goods, tools worth 4.5 lakh on sale or approval basis. When I refer to sale or approval basis, it is not meant for supply at that moment. Section 31, subsection 7. So I have a time limit for a period of 6 months. Within 6 months, I can raise a tax invoice whenever there is an approval. If I have not raised a tax invoice, then it is deemed that the supply has taken place on the day when you have removed the material. This is what covered under your section 31, subsection 7. So here what they say, for that sum of 3 lakhs, in the process of production trial, tools worth 3 lakhs were approved by the customer on 30th June. So on 30th June, there was an acceptance for 3 lakhs. Rest were rejected by ABC Limited. And the tools were received on 31st July and accordingly a tax invoice raised on 31st July. Now question comes here is section 12. When should I raise a tax invoice? Section 12, it travels back to section 31. I have raised invoice on 31st July. Was it raised as per section 31 on or before removal? When I am removing the goods, when I remove the tools, it is not meant for supply. So I have just used a delivery challan. Acceptance has come on 30th June. The moment acceptance has come, my time of supply gets triggered to 30th June. Now, if I raise the invoice on 31st July, if I have raised the invoice on 31st July, I'll consider it for the month of July as my supply and I pay tax in the month of July. But here, as per your section 12, read with your section 31, acceptance for that goods came on 30th June. So my onus to raise a tax invoice or time of supply gets triggered on 30th June. This is your question number 1. Question number 2. Yeah, this is set in the backdrop of your continuous supplied services, supply of goods. Mrs. Water Health and Co. enters into a contract for supply of purified drinking water taxable under GST on a regular basis. Looking into the daily requirement, the client PP Limited, following information was provided for the period June 20 to August 20. June, July, August, 3 months. So from the books of accounts of Wealth and Co, we need to identify what is your time of supply. Receipt of advance for 20,000 on 3rd June. So when I receive money on 3rd June, section 12, subsection 2, either issuance of a tax invoice or advance, time of supply gets triggered. However, notification 66 says that there is a relaxation for advance. So I'll wait for tax invoice to be issued. Statement issued for consumption on 30th June, 31st July, 31st August for 25, 32, 28. Referring back to section 12, subsection 2, whenever there is a continuous supply of goods, wherever you have issued a statement, that shall be your time of supply. Because you have issued a statement on June, July and August, that shall be your time of supply. Differential amount, June and July for 16,000 was received on 15th August. There was a money to be received on 30th June or 31st July. That money was received on 15th August. If it is part of statement, already statement is issued, no additional time of supply. In addition to that statement, there was a amount received on 15th August on the receipt basis, that is time of supply shall be 15th August. So that should be the provision, section 12, subsection 2. Point number 3, this is little lengthy question. This is purely set in the backdrop of section 13, subsection 2. As I have said clearly, advances, money, when we talk about services, my time of supply is on the basis of issuance of a tax invoice if I have issued on as per the time limit, or receipt of money on advance. Either of these two, my time of supply gets triggered. A lengthy, but it is a very healthy example to prepare from your examination perspective. Now quickly I'll do one thing. Now these are the questions which I have given for your practice purpose. I'll come back to my slide called Steel Authority of India Limited. This is one example which we were talking about, Steel Authority of India Limited. So this particular case, Steel Authority of India Limited, what happened? For when goods were removed, January 2005, when the goods were dispatched from sale to Indian Railways, based on your standard costing, whatever value was prevalent, bill was raised. After a period of 1 year, actual versus standard, there was a comparison. Now I'll give a couple of reasons why this practice is there. I don't know the BOQ, what is exactly material which I am going to bill for. I don't know what is impact of change in the prices. Like steel prices keep on changing every now and then. There's no control on the market steel price. Third element, there is a forex movement. There could be some cases where I import raw material, I import some goods, machinery from abroad, where there is a forex fluctuation which also gets peeped into my pricing aspect. Because of various factors, price factors which is beyond the control, I go with the standard cost. After some period, I review for that period what was supplied, what was the standard cost, and what was the actual cost. If there is a variance between these two, there will be approval from the customer to raise the bill for the balance amount. Now, what happened June 2006? For that particular supply of which incurred on January 2005, there was a price difference approval given by Indian Railways. For that price approval, which is called a supplementary invoice, a total sum of duty which came around 142 crores was quantified. So this sale has remitted 142 crores on 30th June 2006. When that amount was deposited, immediately the departmental authorities have come and said, look, your time of supply, your liability to pay the tax or the duty shall fall back to January 2005, not to your June 2006. Invariably, there is a short payment of duty. For that short payment of duty, you pay interest for a sum of rupees 15 crores. This was a demand from the department. Now, this is one case law which was set in the backdrop of your time of supply. That is the time when your liability gets crystallized, and valuation. What is the value on which the duty or tax ought to be paid and actually paid? This is something which we need to understand from this topic of time of supply. That is how relevance of this case law, Steel Authority of India Limited versus CC Raipur, which is listed in ELT. When you put this number on Google, you'll get the detailed case law for this particular thing. So this is the backdrop with which this case law was picked up for our discussion. Now let me check the time. Now it's 9 o'clock exactly. Like I've been given 6 to 9. If there are any couple of questions, quickly I'll take up. Otherwise, we will wind up our session and we will discuss further on valuation in tomorrow's session. Okay. There are no dots for today's topic, what we have discussed till now. So tomorrow we'll start with our value of supply, which deals with your valuation under GST. Very, very important chapter. So we'll discuss that chapter at section 15, then rules which are framed under section 15, and we will take a couple of examples which are set in the backdrop of this. With this, we will wind up our discussion tomorrow. See you all tomorrow. Good night.